Hello and Assalamu alaikum. I am Kashif Kamran. A very warm welcome to the Advanced Audit and Assurance Webinar to Success for June 2022 exams. Today is the day 3 of the Webinar to Success. Let's see what is the agenda of the day 3. And I hope you have thoroughly enjoyed the first and the second day, irrespective you have taken the live session or you have catch up the recordings on my YouTube channel. Now, day 3 is in continuation of the day 2. We will be discussing the September-December 21 exams, but the focus will be on question number 2 and question number 3. That is the section B of the paper. Now, in the day 2 yesterday, we were looking at the section A, the 50 marks question. We drilled through the major parts, which is the audit procedure and the significant audit risk and the understanding of the significant audit risk alongside the matters you should consider in planning the first year audit. We didn't have time to work on the ethical areas from the exhibit number 5 of the question number 1. But today is the day 3 right here. And the day 3 is again looking at the September-December 21 paper, section B of the September-December 21 paper. And again, it will be insightful, as you will be learning a lot of new things, tips and techniques, which will boost your confidence for the section B of the exam paper. So let's start the proceeding of the day 3. So this is the agenda for day 3, a drill inside out. Question number 2, question number 3. So we will be doing a drill again within the constraints of the time. Not every part of the section B question would be possible to do in the live session, but as much as possible, I will be guiding you. Analysis of the examiner report, because again, that's critical. I will be spending comparatively higher time in comparison to the day 2 on the examiner report, because we need to learn lots of good things from the examiner report. We need to learn the analysis of a stronger student and a weaker student, because that is exactly what will benefit you. Till the time you're not reading the examiner report or you're not putting the appropriate time on examiner report, you are far away from success. You still have 16 days to exam, and I've recommended you to read at least 4 latest examiner report on the day 1, which is still valid, and you should find time to read them properly, because the more you read them, the better for you to investigate the reasons of a stronger student and to investigate the reasons of a weaker student, and that will really be productive and beneficial for you in terms of your success in upcoming exams. Marking schemes. How many marks are available in the section B in the different topics we will be looking for? We had an analysis of the marking scheme for audit risk yesterday, and procedures, planning methods, etc. And again, the marking scheme will be unfolding today as well for the section B of the paper. So let's start the analysis. We are back to the platform, the practice platform. I hope you can see in front of your screen the practice platform. All of you, please confirm that. We are in section B now. Okay, that's great. One clarity, yesterday on the day 2, while we were attempting the question number 1, right, we didn't use the scratch pads. So I hope you got the message from the tutor that at least if you take my viewpoint, I believe scratch pads are useless and they waste time. If you want to do a rough working, or if you want to do something extra, you can do that in the word processor, which is in the question number 1, the briefing note, and you can delete that later. So if you want to incorporate some extra things so that you can remember, but later you have to delete them. So I think you should keep all the information within one document, which is the briefing note, and later you can delete it. That's the best way. Secondly, spreadsheets. In the AAA paper, if you are calculating the materiality, we even found some trends yesterday in day 2. We even found some calculations on day 2. All those calculations were done on the calculator and they were put directly on the briefing note. There is no need to spend time on a spreadsheet unnecessarily. You can save your time and you can just use the calculator, find the materiality, find the percentage increase or decrease, even find a ratio and directly put the answer on the briefing note instead of taking it to the spreadsheet and then getting confused how to correlate the spreadsheet with the briefing note. So just ignore that. So the amount of calculation you have in the AAA paper, that's doable on a calculator and directly putting the answer on the briefing note or the word processor as the case is. I hope you're clear on that. Now, some of the students are very comfortable with using their own calculator, and you can carry your own calculator on the day of exam. ACCA gives you a permission to have your own calculator in a computer-based exam. So you can have your own calculator on your desktop and you can use the calculator at your convenience. If any student is comfortable with the on-screen calculator and you have been practicing with on-screen calculator, then you can use the on-screen calculator. As a tutor, I myself prefer my own calculator, not an on-screen calculator, because you're more comfortable with a calculator in your hand and doing the calculations. That's my perspective. You might have a different perspective and you might like the on-screen calculator. So you need to be very clear about Scratchpad. You need to be very clear about the spreadsheet. You need to be very clear about the calculator, because these are 3 fundamental things where every student have his or her myths. Some like Scratchpad, some don't. Some like spreadsheets, some don't. Some like on-screen calculator, some don't. So you have to take your own perspective. And I have given you my perspective on them. Copy paste. We did use copy paste yesterday. I was copying things from the exhibits and dumping them to the briefing note. But I hope you look at my copy paste. My copy paste was just like a sentence, not a paragraph. And then the sentence you copy pasted, you have to convert that into a proper explanation. You cannot just copy the paragraphs and paste them on a briefing note. That's something examiner don't like. A lot of copy paste is something the examiner don't like, but you can take a sentence, you can take a word and put that in the briefing note for you to remember later. And then you can convert that into a proper answer. So that's just like a recap from day 2 to day 3, because we are still using the platform. And I will still be using the platform today as well. So you will gain more understanding of using the platform if anyone is using it for the first time in the last 15 days before exams. Is that clear to all of you? Should we move on to the section B now? Okay, great. Thank you. Okay, now in front of your screen, you can see the section B. There is a question in section B. Now, we know from day 1 specifically that section B consists of 2 questions, right? Question number 2 and 3 with each worth 25 marks. You have no professional marks in section B. The only professional marks is in the section A, which is 4 for a briefing note. Now, when you come to section B with 2 questions on hand, one of the questions in section B has to be from the syllabus area E, and that is default. So every time you open the section B, one of the question will be from syllabus area E, that is default. And syllabus area E means completion and reporting. So examiner will ask you something from the audit reporting area and something from the completion area in the syllabus area. Completion area means evidence. Completion area means subsequent events. Completion area means going concern. So examiner might ask you something on going concern, subsequent events, or something on audit evidence in the working paper file and reporting. So that's like mandatory in the section B. Now it's up to the examiner whether the examiner gives you a question on completion and reporting as a question number 2 or as a question number 3. In most of the cases, it's question 3. Now, the other question in section B is open. Examiner can ask anything in the other question of section B. It can be from syllabus area F, which is other assignments. Other assignments is very popular in section B. Syllabus area F. It can be from a topic like money laundering. We have seen a couple of times money laundering coming in section B. It can be from a topic ethical, professional, and quality control issues. A couple of times we have seen ethical, professional, quality control issues coming in the section B. Or it could be from a topic like practice management, accepting a new client or accepting a service from an existing client. It could be from that area. So anything is examinable. Mostly what we see in an open question is either the other assignments, is either the ethical, professional, quality control issue, is either money laundering, something like that, right? So that's like one of the more common parameters. But again, the one of the question in section B is open, and it can come from any other syllabus area. But syllabus area D, planning, will never come in section B, right? Because planning has already been tested in question number 1. So which syllabus area remains? A, B, C, E, and F. And E is mandatory. E is mandatory for one of the question, right? So technically, how many syllabus areas then remain for the surprise question, the open question? A, B, C, and F. A, B, C, and F. So the one of the question can be from A, B, C, or F. One has to be from E. One has to be from E. That is confirmed, right? So I hope you're clear with that, right? Just let me put this summary on my Word file, and then let's start on the practice platform quickly. I hope you can see the support file for day 3 in front of your screen. We just need to conclude on a section B analysis. So that benefits you when you're preparing yourself in the last 15 days. When you look at the section B, you know section B consists of 2 questions. 2 questions are there in section B. One of them has to be from syllabus area E. So that's for sure, right? One of them has to be from syllabus area E, which is completion and reporting. An examiner might test your knowledge about audit evidence, might test your knowledge about quality control issues, because quality control issues also come at a completion stage. Examiner might test your knowledge about audit evidence, about the going concern, subsequent events, or the typical question on audit report, right? So one of them has to be from syllabus area E, completion and reporting. The other question will be from syllabus area A or B or C or F, or a combination of many, of these syllabus areas, A, B, C, or F, syllabus areas. Not necessarily the complete question is made on one syllabus area. So that's how the section B looks like. So you need to be pretty sure that syllabus area D is missing. Syllabus area D is put in question number 1, right? Will not get repeat in section B. So you need to be very sure of E, and you need to be very sure of A, B, C, and F as an open-ended question coming in section B. Mostly F is very common, other assignments, and a question on quality control is very common. Professional issues, ethical issues, these are very common questions in section B. I hope you're clear on this, right, all of you? Is that clear? Section B analysis, so you know how to control it, right? Let's move back to the practice platform. Can you all see the practice platform on your screen? Please confirm. Okay, thank you. Now, in front is the question number 2. I'm reading the main screen of the question 2. The main screen you can see in front. It is the 1st of July. You are a manager in Kelly, a firm of chartered certified accountant, which offers range of service. So it's quite a good firm. It's offering range of services. The managing director of Flynn Company, which is not currently a client of Kelly. So Flynn is not a client of your company, right? Of your audit firm, sorry. Has contacted you regarding a review engagement, which he would prefer, which he would like your firm to provide. So is Kelly my client? No. So is Kelly is Kelly like a new client for my firm? Yes. Have I ever done or have I ever had any associations with Kelly? No. So which is currently not a client of your firm, right? But they want you to perform a review engagement. Kelly and Company has already conducted specific client identification procedures. So you've done the client identification procedures in line with money laundering regulations with satisfactory results. So have you reviewed the anti-money laundering procedures for the client? Have you performed the money laundering testing on the client that the client is not involved in money laundering? Yes, which is basically known as know your client procedure. So can you, when you're writing the answer, can you write, we should check the client whether the client is involved in money laundering? No. Can we check the client is involved in tax evasion? No. Because you've already performed testing on the client involvement in money laundering or tax evasion or bribery or corruption, and you found the client good. So you've already conducted specific client identification procedure in line with money laundering regulations with satisfactory results. So that's something important, right? Which you should be careful of, and you should not be repeating the same when you're answering your question. Flynn Company operates in the food processing industry, and the company is planning to build a new food processing facility in a foreign country. Okay, the company is planning to build another facility, but not in the local country, rather in a foreign country. And we know whenever a company goes to a foreign country, you have foreign exchange fluctuations, you have foreign exchange gain or losses. And when you go to the new country, you might have a lot of inexperience with the new country, inexperience with the laws and regulations. That's just like a thought process. I don't know what are the requirements of the question, but while I'm reading the case, I'm just making my mindset. So money laundering procedures have been carried out. The client is good for money laundering. They're not involved in money laundering. The company is planning to expand to a foreign country, and we just thought about something in relation to a foreign country. This will cost approximately $15 million to build, and Flynn Company has approached the lenders to provide necessary finance. So you will need a $15 million to build up the new plant in a foreign country. And for that, you need a loan. And for the loan, you have already approached a lender, $15 million loan. The following exhibits are available on the left-hand side, exhibit number 1 and 2. The exhibit number 1 contains information regarding Flynn Company and the review engagement your firm is invited to provide. So one of the exhibit is about Flynn Company and the information you need to perform a review engagement. So that's one exhibit. The second exhibit is about a cash flow forecast, and the supporting notes and assumptions used for a loan application. So because the company is applying for a loan, they need to present a cash flow forecast. So the cash flow forecast has been given in one of the exhibit. And in one of the exhibit, the information about Flynn Company has been given. So you can conclude whether you want to accept the review engagement from Flynn Company or not. Are there any risk factors which you should consider when accepting the review engagement from Flynn Company? Remember, Flynn is not your client, right? But the money laundering procedures have come out with satisfactory results. Now, on the left-hand side of your screen, you can see exhibit number 1, Flynn Company, exhibit number 2, cash flow forecast. So you have 2 exhibits. For every exhibit, you have a requirement. You have a requirement A for 10 marks, and you have a requirement B for 15 marks. Now, the requirement A will be in line with exhibit 1 because that's how the section B is structured. Every exhibit converts to one requirement. So exhibit 1, requirement 1A, sorry, requirement 2A. Exhibit 2, requirement 2B. So we have one requirement for 10 marks for Flynn Company. We have one requirement for 15 marks for cash flow forecast. We're not using spreadsheets. The answer will get to the word processor. So you immediately open the word processor to make your answer ready. And alongside the word processor, you open up the requirement A to see what exactly is in the requirement A. So 2 windows, one of the word processor and one of the requirement A. And you simply start making the structure of your answer. Answer 2A. Answer to question number 2A. And you copy the question. Evaluate the matters to be considered by Kelly and Company in deciding whether to accept Flynn as a client, because it's a new client. So whether you should accept Flynn as a client, even though the results of money laundering procedures have been satisfactory, and whether to perform a review engagement on the business plan, or whether to perform a review engagement on the cash flow forecast. Control C, 10 marks, and you bring it to your word processor. So we have 10 marks for it, number one. Examiner is saying you need not to include methods relating to client due diligence. And examiner was very clear that already the client due diligence, the money laundering procedures have been done. So you will not make any answer about money laundering or any answer about tax evasion or any answer about bribery and corruption, because that has already been checked. So no need to repeat money laundering, bribery, corruption, and tax evasion, because that has already been performed. Minus that, you can look into the other factors. And you have 10 marks. Evaluate the matters to be considered, right? Now, every of the matter is worth 1 mark. But you have to be very careful. The question is not asking you one thing. The question is asking you two things. Evaluate the matters in considering whether you should accept Flynn as a client. That's one. Whether you should accept Flynn as a client, number one. And I hope you can see this word and. This word and is very critical. And. So that is the break of a question. And whether to perform a review engagement on the business plan. So two things needs to be decided. Firstly, whether you should be accepting Flynn as a company. One, if you say, yes, I'm accepting Flynn as a company, then the second decision you have to take is whether you will be performing the review engagement on the business plan. And look at this word here, evaluate. That means you have to give a conclusion. So you have to be very careful about it. Now, just let me take this question on my word processor, on my support file for a proper analysis, and then we write the answer on the practice platform. Now, just an analysis, right? Analysis of question 2 from the September-December 21 paper. I'll do the analysis on my support file, and I'll write the answer on the practice platform and later copy the answer on my Word file. Okay, analysis of the question 2, September-December 21. Let's start with it. Now, the first requirement is question 2A. And this is the requirement. And we have 10 marks. Now, sometimes the students are so puzzled or so at a so higher stress level in exam paper that they ignore something. Now, see what the question is asking. First of all, evaluate. Now, if the question is asking you to evaluate something, it is very essential for you as a student. Evaluate means to give a conclusion at the end of requirement 2A. If you are writing a briefing note in the question number 1, then you have to give a conclusion at the end of the briefing note, right? Please remember that. I was very clear on that yesterday. But if you are writing question 2, question 3, which is without a briefing note, so if the requirement 2A is asking you evaluate, then you have to give a conclusion at the end of the requirement. Now, what are you evaluating? You are evaluating two things. What is the first evaluation? You are evaluating two things, two aspects. What is the first aspect you're evaluating? Matters to consider by Kelly in deciding whether to accept Flynn as a client of the firm. Deciding whether to accept Flynn as a client of the firm. Control C, Control V. So what is the first decision we are taking? Deciding whether to accept Flynn as a client. So we have to conclude on that whether are we accepting it or not. If we conclude we are accepting Flynn as a client, then what is the second evaluation you have to do? Whether to perform the review engagement to report on the business plan, whether to perform a review engagement on the cash flow forecast. Control C, Control V. So two decisions to be taken. Deciding whether to accept Flynn as a client, and whether means decision. Yes or no, whether, right? Whether means yes and no. Whether to perform a review engagement to report on the business plan. So first part of the question is client acceptance. And the second part of the question is to agree whether to provide the service or not. Am I clear? The first part relates with client acceptance, So you should have knowledge of this from practice management syllabus area, which is C. I hope you have it. And whether to perform the review engagement. The second part asks you to conclude whether you will provide this service. Review engagement is a service, right? Accepting a client is different and offering a service is different, right? Whether you will provide this service to the client or not. Is that clear to all of you? What is to be done in the first and the second part? And I hope you agree that a critical analysis of the requirement is crucial to get to the right answer. If you're not reading the requirement well, you're not producing the answer well. So how many things is the examiner asking for 10 marks? One thing or two things? Tell me. How many things is the examiner asking? One or two for 10 marks? Two. And are you clear with the two things? One is accepting a new client, and I hope that's quite a repetitive syllabus area, accepting a new client. It comes very common in the AAA paper, accepting a new client, and I hope you are clear with the fundamentals of accepting a new client, right? But minus the money laundering, minus the tax evasion, minus the bribery and corruption. You will not be writing anything about it, right? And accepting a service. So do we have competence for the service? Do we have resource for the service? Do we have time to offer the service? You need to look into the limiting factors for service, right? Because when you're offering a service to a client, you will be very much interested to know about this. When you're offering a service to a client, right? Whether will you provide the service? Now, what does a service relates with? Tell me. What does a service relate with? Can I offer a service? Can I teach a AAA paper? What will I be looking for? Can I teach the AAA paper as a service? Can I provide the service? I first need to look at competence. Do I have competence? Do the firm has competence? Or if I ask a question, can I teach the AAA paper? I need to ask myself, hello and assalamu alaikum, everyone. I am Kashif Kamran. We got disconnected from the session, day 3, and I'm resuming back from where I exactly left. So let's resume from the point we got disconnected. Now, at the time we got disconnected, I was discussing with you the question number 2A of the September-December 21 exams, which is right in front of your screen now. And we were discussing the parameter of accepting a service from a client, whether that is a new client or that is an existing client, but the concern factor is accepting a service. And now, whenever you are accepting a service in exam context from a new client or an old client, the very first thing you need to look at is your limiting factors. Number one, competence. Do the audit firm have competence to offer the service? Now, that's extremely important for a service provider to assess whether the service provider has the competence to offer the service. Now, if someone comes to me and asks me, can you teach the AFM paper? I'll say, no, I cannot teach the AFM paper because I don't have competence to teach the AFM paper. So it's not necessarily that the service provider is competent enough in every service. So competence, do the firm have competence, is to be judged. Then the firm has to look for resources, whether the firm have resources to offer the service, availability of resources. And it could be a limiting factor. that even though you have competence to offer the service, but you don't have the staff availability. The staff is in shortage, or the staff already is deputed. So there is no staff available. So resource can also become a limiting factor when you're offering a service. So you need to look at the resources and the availability of resources, because otherwise it can even become a constraint factor. Then the deadlines. What sort of deadline is the management giving you for offering this service? Are the deadlines reasonable for you to offer the service? So you need to realistically evaluate the deadlines, and you need to realistically believe that these deadlines are good enough for you to offer the service. So if someone asks me, can you teach the AAA paper in 2 weeks? I'll say, no, it's humanly impossible to teach the AAA paper in 2 weeks. So you need to critically evaluate the deadlines, need to ensure that the service can be offered within the reasonable time which is given to you by the management. So whenever you are offering a service, you need to consider the competence, you need to consider the resource, you need to consider the deadlines. Then more importantly, you need to consider the intended users, because intended users of that service will be important, to whom the report will be published, to whom the report will be available of the service, because you are very much concerned about your liability versus the auditor liability. So when you're offering a service, you are very much concerned about your liability as an auditor, that my report will be relied upon by whom? Who will be reading my report? So to whom I will be liable as an auditor. So to whom the report will be available, who will be the intended user of the service of this business plan? So if I'm reporting on the business plan, if the management asks me to report on the business plan, my report will be readable by whom? Who will be the audience of my report? So I need to report on the business plan, right? So I need to be very realistic about who will be reading my report and I'm liable to whom. Then again, because you're reporting on a business plan, so when you are accepting a service, you also need to agree your assurance level with management. You need to have a clarity on the assurance level. There could be a misunderstanding between you and the management about the assurance level, because you are offering a review engagement currently. The management might believe you will offer them a reasonable assurance when you are offering a review engagement, and we know a review engagement is a moderate assurance. So you need to have a clear understanding between the management and the auditor when you are accepting a service, that what exactly will be the assurance level. So a clarity on the assurance level versus the misunderstanding which can come later is to be settled down before you accept the service. Is to be settled down before accepting the service. So in the exam paper, when you are accepting a service, you need to be very critical that do you have competence? You have to link that to the case study, resource, deadlines. They're all linkable to the case study. Intended users, who will be the users of my report, because I need to report on the business plan. What will be the assurance level? So whether to perform the review engagement. So before you consider whether you perform the review engagement to report on the business plan, you need to consider that the factors are favorable. Also, whether to perform the review engagement to report on the business plan, you will consider your fees. Is the management giving you a fair fees, a reasonable fees? Reasonable fees versus work. Is the management giving you a good fees, a reasonable fees versus the work? I will accept it. But if the management is not giving me a reasonable fees, I will not accept it. So even the fees versus the service, because no service provider would like to work for an unfair fees. Are you clear with the second parameter? Whether to perform a review engagement to report on a business plan? Are you all clear with it? Waiting for your answers. So are you clear with the parameter offering a service, whatever the service is? Are you clear with the bullets coming under it? Okay, great. Now move on to the next parameter. When you are deciding to accept a client, not a service, right? I want to accept a client. Now look at this first part of the question. Deciding whether to accept Flynn Company as a client of the firm. So that means it's a new client. Should I accept this new client? Is there something wrong with the new client which I should not take on? I'm accepting a new client. Now, when you're accepting a new client, I must have many questions in mind. For example, I am teaching at a college, but there is an offer coming from another college, and another college wants ask me, can you teach with us? Because it's a new college for me. So I will first evaluate the reputation of the college, the credibility of the college. I will first look for what is the market standing of the college in the market before saying yes to them. So can I offer my services as a AAA tutor? Do I have competence? Yes, that's a service, right? But should I take on a new client? That's a different story. So what I need to evaluate is deciding whether to accept Flynn as a client. And the examiner is telling us something very important, that when you are accepting Flynn as a client, what was the examiner telling us? The examiner was telling us that already the know your client procedures have been performed. Know your client procedures have been performed. What does that mean? That means procedures relating to money laundering has been performed. So if the student repeat the money laundering procedure, or the student repeat a point that the client is involved in money laundering, you will not get any marks for that. Let me show you that. This was very clearly mentioned by the examiner, right? When we were looking at the practice platform yesterday. I hope you can see in front of the screen the practice platform. And the examiner was very clear here. You do not need to include the methods relating to client due diligence. Know your client procedures. Now, what exactly are know your client procedures, which the examiner is saying you should not look into? Money laundering. Is the client involved in money laundering? You're not considering that, because that has already been done. Even corresponding with the previous auditor. When you correspond with the previous auditor, that is know your client procedure. So even if there is a previous auditor in the scenario, you are assuming that you've already corresponded with them. So examiner is saying you're not involving yourself in corresponding with the previous auditor, and you're not involving yourself with the money laundering procedures, right? So if there is a previous auditor in the case study, you will assume that you've already contacted him, right? You will not write a point correspond with a previous auditor, which is a very general point. But if the examiner is not mentioning the note number in the question, examiner is not telling you whether the procedures have been performed or not, then can you correspond with the previous auditor? Yes. Can you do the money laundering procedures? Yes. But is the examiner prohibiting us to do this? Everyone, please give me the answer. Is the examiner prohibiting us not to make any point on money laundering and not to make any point with correspondence with the previous auditor? Are you clear with it? So we are prohibited, right? Yes, KYC is assumed to be completed. But what exactly is the definition of KYC, right? It only includes money laundering, number one, and it only includes correspondence with the previous auditor. Nothing else. So can we test the integrity of the client? Yes, because there can be many other factors of client integrity minus money laundering. Examiner is saying KYC procedures, which are only money laundering procedures, right? So can there be any other aspect in the question which questions the integrity of the management? Yes. So if there is anything specific in the case which is questioning the integrity of the company, we will develop the point, because we are not developing the point on money laundering, but we can develop the point on any other area given in the case study. I hope you're all clear on that. So let's move back and go to the support file. Okay, deciding whether to accept Flynn as a client. Now, when generally we are accepting a client, leaving aside this question, whenever we are accepting a client, what happens? Whenever we're accepting a client, we look into client integrity issues. But examiner is saying in this question, in the question number 2A of the September-December 21 exams, you will not look into money laundering. So you will minus the money laundering when you're looking at the client integrity. But if there is any other issue beside money laundering, you will consider it. So question number 2A of September-December 21 exams, you will not look into the money laundering issues or not the money laundering issues, as the examiner has mentioned that KYC procedures are already performed. But in another question from another past paper, can you do it? Yes. But in this question, you cannot do it, right? But can you consider other client integrity issues in the case study minus the money laundering? Tell me. Can you consider the other client integrity issues in September-December 21 exams minus the money laundering? Yes. Totally agree. Next, correspond with the previous auditor. Correspond with previous auditor is a very logical point. But in this question, September-December 21, in September-December 21, question number 2A, you cannot do it. You cannot do it because examiner has already mentioned that KYC procedures are performed. But if you are attempting another question besides September-December 21 and you are accepting a new client, can you correspond to the previous auditor? Yes. But in this question, can you correspond with the previous auditor? Tell me. In this question, can you correspond with the previous auditor? In this question, can you correspond with the previous auditor? No. But in another question, can you correspond with the previous auditor? Yes. So when we are accepting a new client, do we correspond with the previous auditor? When we are accepting a new client, do we correspond with the previous auditor? Tell me. Yes. But in this question, we will correspond? No. So I hope you're clear. Move next. When you're accepting a new client, you are looking for what? When you're accepting a new client, you're looking for ethical issues. You're looking for ethical issues, specifically given in the case study. So are there any ethical issues when we are accepting Flynn as a client? It will be given in the case study. If there are any ethical issues, you need to look into the safeguards. Look for safeguards as well. You will get marks for that. Look for safeguards as well. You will get marks for it. So when you are accepting a new client, you look into the integrity issues corresponding with previous auditor and ethical issues. But in this question, we will be looking for integrity issues minus money laundering. We will not be corresponding with the previous auditor at all, but we will be looking for the ethical issues in the context. Then we have to think whether we can offer a service to the client. Can we offer the service to report on the business plan? We look for the fees, we look for deadlines, we look for competence, we look for resources. So accumulatively, we need to reach a 10 marks answer. So how much marks we have for this question? In total, we have 10 marks for this question. So how many marks we need to develop? Every matter, each matter discuss will give you 1 mark. Is that clear? So you need to accumulate 10 matters. Every point you write will give you 1 mark. So suppose you're writing 2 points under client integrity. So client integrity will give you 2 marks. Or you write 3 ethical issues. So you automatically get 3 marks for that, right? But that is the marking scheme which you all need to remember for a question like such. I hope you're clear with it. Right? Is that clear with question number 2A? Can we just do a quick brainstorming of the answer and get to the next part? I'm not writing the answer, but let's just read and just have a brainstorming. Exactly what will be the answer for question number 2A. So at least you have a mindset and then you can write in the answer. Let's do a brainstorming. Let's go back to the practice platform. I hope you can see the practice platform in front of the screen. We need to look into the uh, word processor. Here is the word processor, right? I've just copied the question when we got disconnected on the word processor. Now we need to write the answer for it, but we are not writing the full answer. We're just doing the brainstorming of finding the points for a 10 marks answer. Okay, where is the answer? In the exhibit number 1, Flynn Company. I hope you can see that. I've just opened the exhibit number 1, Flynn Company. Can you all see that in front of your screen? Exhibit 1, Flynn Company. And is that readable by all of you? Is the font size good enough for you to read? Okay, that's great. Okay, I'm reading. If I get any point, I will copy paste that in my word processor. Flynn is an unlisted company whose main activity involves processing frozen food. The company has several processing plants in the home country and one located in the foreign country, near land. In order to expand its product range, the company is planning to build a new facility and begin processing in another foreign country, far land. So they want to diversify to far land because they want to expand their operation. Far land. Flynn Company has approached its provider of finance, Morton's Bank, to provide a $15 million loan, which will cover the necessary capital expenditure. So they want to go to a new country, set up a plant. They need a $15 million. They have contacted their bank for a $15 million loan application. Near land and far land both have different currencies that used by Flynn Company. So they have an exposure to foreign currency gain and losses because there are different currencies being used in near land and far land. So I think the exposure to the foreign currency fluctuation will increase for Flynn Company in future. This information might become critical when you move to the other parts of the exam question. Morton Bank has asked Flynn Company to provide a business plan for the next 3 years in support of the loan application. So that means the loan is repayable over a 3-year period, and the bank wants to provide a business plan for the next 3 years. So how long the cash flow forecast will be? The business plan includes the forecast statement of profit and loss and a cash flow forecast. So how long will be the period of the cash flow forecast? 3 years. Now, is that a relevant matter when I am accepting a service? When the time period of a forecast increases, does it increase the risk of subjectivity? Does it increase the risk of wrong estimates? Tell me. And is that something I should consider when I am accepting a service? So when I am accepting a service to report on the cash flow forecast, should I consider the degree of subjectivity? Should I consider the degree of subjectivity as a risky factor considering how long the cash flow forecast is? 3 years. And do you believe 3-year increases the subjectivity? Agree, disagree? Do you believe 3 years increases the subjectivity of a forecast? Do you all agree? Okay, that's great. So should I pick this point number 1? A business plan for the next 3 years to support the loan application. Control C, and I bring it back to my word processor. Matters to consider in accepting Flynn number 1 and the service to report on business plan. Service to report on business plan. So I'm not bifurcating them. Either some matter will be for accepting Flynn or some matter will be for accepting the service to report on business plan together. Now I got my first point, which is number 1, business plan for next 3 years to support the loan application. Now this means that the cash flow forecast will be for 3 years, which increases the risk of subjectivity as the time period of forecast is significantly lengthy. The time period of forecast is significantly lengthy, which increases the risk of subjectivity, and the audit firm has to be careful when evaluating the assumptions used in forecast as part of a review engagement. So do you believe this will become a more risky engagement for the audit firm? And do you need to have experienced resources? Should you use experienced resources because there's a high degree of subjectivity? Can you use the junior staff? No. Should you use the senior staff because there is a greater degree of subjectivity? Do you all agree with me? This is just a thought process, right? This is not the proper answer. But do you agree this matter is of importance when we are considering to report on a business plan? Agree or disagree? Is this an important matter which can fetch me 1 mark, sorry? Waiting for your answers. Do you believe this is a matter relevant to accepting a service on a business plan? Okay, thank you. Please be quick when you're responding to questions because that saves time, right? Let's move back to my exhibit. Okay, the bank has requested that the forecast be subjected to an independent review and that a review report should be included with the loan application. So will bank be my intended user? Will bank be reading my report on the business plan? So can the bank make me liable if there is something wrong in the report? So do I know my intended users? So the bank has requested the forecast to be subjected to an independent review and a review report should be included in the loan application. So the bank has requested forecast to be included in the independent review. Control C. We got another point and we bring it back to the word processor. Control V. The bank has requested the forecast be subjected to an independent review. This means that the audit firm needs to be careful in terms of their liability, because if there is any negligence in the report prepared, if there is any negligence in the report reviewed by the audit firm, the Morton Bank can make audit firm liable. Is that clear? Can the Morton Bank make the audit firm liable if there is something wrong in the review report given by the audit firm? So can there be negligence if you do something wrong as an auditor? So do you have an extended liability here? So do you need to be more skeptical when you're performing this engagement? Will that increase your fees? Will that increase the resources you will be deputing? So do you need to be more watchful? Do you need to be more careful because the bank will be an intended user? So you got second point, right? Moving on. Flynn Company is expecting to submit the business plan and review report to the bank on 5th of August. Okay, now by when you need to complete this engagement? Because the company needs to submit the business plan to the bank on the 5th of August 20x5. And I think the year end of the company. Okay, just let confirm when we got this. Okay, it is the 1st of July. Can you see here? All of you? Can you see right here? It is the 1st of July. So it's already the 1st of July. And we need to submit this application to the bank. Flynn Company is expected to submit the business plan till the 5th of August. So how much time we have to complete this review engagement as an auditor if we accept this? How much time we have to complete this? Just 1 month? Yes, auditor is still liable, right, for the moderate assurance. At least you're giving an assurance, right, Saleha? So if you're giving a moderate assurance, you're liable in the context of the moderate assurance, right? You're not giving a zero assurance, right? You're giving a moderate assurance. So within that boundary of the moderate assurance, you're liable, right? So how much time we have? 1 month, right? So let's take this point down here. Next point, point number 3. The Flynn company is expecting to submit the business plan and the review report to Bank on the 5th of August. Currently, it is July 1st. So if the audit firm decides, we are not sure, right? So if the audit firm decides to accept the service and the new client, the audit firm will hardly have 1 month to complete the review engagement, on business plan, which already has a greater risk of subjectivity, as it is spread over 3 years. So we're not saying that you cannot do it in 1 month, but we're writing a very diplomatic answer. We are saying that if you accept Flynn as a client and the service, you will hardly have 1 month to do it. And the audit firm needs to consider, is it doable within 1 month, considering there is a higher risk of subjectivity as the cash flow is spread over 3 years. So we're not giving any conclusion. We're simply saying that this is a matter to be considered, that the deadlines put in place are just 1 month. Are you all clear with it? So see, how am I picking up the point from the case study? I will only write the journal points if my case gets exhausted. But if my case doesn't get exhausted, I will continue to write the points which are specific to the case. You need to prioritize the case points first before you write client integrity, correspond with previous auditor, fees, competence, resources. You cannot write these points at the top. You need to write them down. But the first points you will write is the prioritized one available in the case study. Is that clear? Prioritize the points available in the case study in the order of the case study, right? Okay, let's move on. Next one. I need not to spend my whole time on this. Okay, next, moving on. Flynn company is audited by Roxy Associates. So that's the previous auditor, right? Because they want us to accept this as a new client. Flynn company is audited by Roxy. Do we need to correspond with Roxy Associate in this question? Do we need to correspond with Roxy Associate in this question? Because examiner was telling us that no, your client procedures have already been done. So if we write correspond with Roxy Associate, will that be a right point or a wrong point? That would be a wrong point. But in any other question, can we correspond with the previous auditor besides September, December 21? Yes, we can, right? Okay. Flynn company is audited by Roxy. A new audit manager, Mary, has recently been recruited by your firm from Flynn company, where she worked in the internal audit department, and she told you the following. Interesting. Have we appointed a new manager, Mary? And from where Mary has come from? She has come from Flynn company, a new client which we are considering to accept. In future, if we accept Flynn as a client and Mary is taken as part of the team, if we accept Flynn as a client and we accept to review the business plan, and Mary is taken as part of the team to review the business plan, will there be a familiarity threat and a self-review threat with Mary? Will there be a familiarity threat and self-review threat with Mary? Because Mary has worked there, right? Will Mary be critical of reviewing the work? And will Mary have familiarity with the people in the organization? So is this if this future, yes, this is a future threat, right? If only we accept this client, right? And Mary is taken as part of the team. If Mary is not taken as part of the team, that's fine. What is the safeguard? Mary should not be part of the team, right? Mary should not be part of the team. So do we have a problem here? Mary Sunshine has recently been recruited to your firm from Flynn company. Control C, and we bring it down to the next point here on my list. Okay, Now I'm just cutting short my things. Mary Sunshine recently recruited from in your firm from Flynn Company. Creates self-review. You need to explain, create self-review, threat, why, plus familiarity threat, why. You need to justify that. I'm not doing it. Self-review threat, why. So you will get 1 mark for self-review, justified. You will get 1 mark for self-familiarity, justified. 2, you put a safeguard that Mary shouldn't be part of the team, 3rd mark. So Mary Sunshine, been appointed, creates a self-review threat and a familiarity threat, plus the safeguard. This threat will only exist if the client is accepted and Mary is a part of the team performing. Mary is part of the team performing the review engagement, right? This threat will only arise if the client is accepted and Mary is part of the team performing the review engagement. And the better safeguard here is that Mary shouldn't be part of the team if even you accept the client and review engagement. How many marks will you get here? Ideally 3 marks, because 1 mark will be for the safeguard, 1 mark for self-review, and 1 mark for self-familiarity. So this point number 4 is giving you 3 marks. This is an ethical issue, right, from the case study. I hope you're clear with it. Move back. Okay. And she told you the following. Now, when Mary has joined your firm, see what Mary is telling you. Mary is telling you something very critical. Mary is telling us about Flynn Company, right? Open inverted commas. I know that Flynn Company's auditor, Roxy, has performed review engagements for the company in the past. So she's saying that Roxy has been performing the review engagements for the company in past. I am aware that the latest external auditor report for the year ended 31st of March included a material uncertainty relating to going concern section due to the company's liquidation problem. The company is facing material uncertainties relating to the going concern, and this has been highlighted by the previous auditor, Roxy. But has this matter been communicated to you by the management directly? Who is communicating you this matter? Mary. So is the management concealing this matter from you? Has this matter been directly communicated to you from the management? Has this matter been directly communicated to you by Flynn Company management? No. Who is communicating this? The previous employee. So is the previous employee working as a whistleblower? Is the previous employee working as a whistleblower? But is this questioning the integrity of the management of Flynn Company, that they're hiding information from the potentially the new auditor? So is it an important point? So material uncertainty relating to the going concern problem has been highlighted by the previous employee. Otherwise, as an audit firm, I wouldn't have knowledge of this. If Mary would not have been appointed in my firm, would I have knowledge about material uncertainty? Tell me. If Mary wouldn't be appointed in the audit firm, would the audit firm have knowledge about this? No. So is the client concealing it? Next point in your word processor. Material uncertainty relating to going concern section due to the company's liquidity problem. This matter was highlighted by Mary, but not by Flynn management. Just 1 minute, sorry. But not by Flynn management. So it seems that Flynn management is concealing this issue from the audit firm, and this questions the integrity of the audit of the management. No, see, we cannot take assumptions, Saleha, which drop the point. We are accepting a new client, so it is primarily the responsibility of the management to disclose information to you directly. Auditor can read the previous report. Auditor can read the newspaper. But you need to understand that it is primarily the responsibility of the management to disclose important things about the company directly to the auditor, which they're not doing. So is the management fulfilling their primary responsibility, or they're concealing it? So that is the point of concern, Saleh. Right? So the audit firm, and this questions the integrity of the management. You get another mark here. So this is material uncertainty relating to going concern is becoming a client integrity issue. So we got to like 5 points, but the marks are more than 5 because we already got 3 marks on materiality, 3 marks on ethical issues. So currently we have 3, 4, 5, 6, 7 marks, and we're still in the case study. We're not out of the case study. Okay, we got the material uncertainty point. Next, moving on to the last paragraph. In his communication with Kelly and Company, the managing director of Flynn Company, just 1 minute, sorry. In his communication with Kelly and Company, the managing director of Flynn Company has suggested that should Kelly and Company provide the report to the bank, and assuming the finance is provided to the company, he will be willing to remove Roxy as the company's auditor and appoint Kelly to provide the audit service. Is the managing director giving you an incentive that if you provide me an assurance on my cash flow and I get the loan from the bank, I will remove the previous auditor, and as an incentive, as a reward, I will appoint you as my auditor? So is the managing director trying to bribe you, give you an incentive, give you a motivation of a job? Is that something ethical? Is that something unethical? Is that something ethical or unethical? Is this a bribe? Is this an incentive? Yes. Now, will that deceive Kelly and Company? Will Kelly and Company get deceived that, oh, I get a new job if I give them an assurance? Will they get distracted? Will they have self-interest? Will Kelly and Company have a self-interest threat here for a new job? Right? Right. And is the client trying to intimidate? Is managing director trying to create an intimidation threat by pressurizing the auditor for a new job? That you get a new job if you do something in my favor. So is there a chance that Kelly and Company, to get the new job, override the material uncertainty? There is already a material uncertainty facing the company, and that can affect the loan application. So that means if Kelly has to work in their self-interest, will Kelly conceal material uncertainty from the bank? Because if Kelly is not concealing material uncertainty from the bank, will the bank give you a loan? Never. Why are they not taking a review application from Roxy? Because Roxy knows the reality. Roxy will never give you a report against the material uncertainty, but the new auditor can. So are you trying to bribe the new auditor to get a good report, which Roxy will not give you? Everyone, are you trying to bribe the new auditor for a good report, which Roxy might not give you? That's the reason they're bribing you, right? So the next point is, okay, assuming that finance is provided to the company, he will be willing to remove Roxy as the company's auditor and appoint Kelly as the auditor. Control C. This is a good point. This is an incentive, and you take it back to your word processor. Yes, it is an intimidation threat, right? The client is trying to intimidate you for a new job. They are offering you a new job, and what is basically the objective of intimidation? To get a good report, right? Why you pressurize the auditor to get a good report? So it is an intimidation because they're trying to pressurize you with a new job. And then if you get pressurized with a new job, you will be deviating from giving a realistic picture of the company. I hope you're clear with that, Saleh. Okay, next point. Point number 6. Assuming that the finance is provided to the company, he will be willing. Who is he? He is the managing director, right? He will be willing to remove Roxy and appoint Kelly as an audit firm. So this creates a self-interest threat for Kelly. This creates self-interest threat for Kelly. You need to justify why it is a self-interest threat, and you will fetch 1 mark here. And also, you need to write in the safeguards as well, if possible. Moving on, you will also need to justify that the client is giving you a bribe, or the client is giving you an incentive in order to get a good review report is equal to what? Is equal to question client integrity. Is it questioning the client integrity that the client is offering you a bribe and an incentive in order to get a good review report? So is it questioning the integrity of the management again, the bribe and incentive? So the bribe and incentive is questioning the client integrity. So you will get 1 mark again here for questioning the client integrity. 1 point already for client integrity was up. This is the 2nd point on client integrity, that the bribe and incentive being offered for a good report tests the integrity of the management here. So the management is very clever here, right? They want to remove Roxy, get you in, so because you help them. Okay. Also, is there an advocacy threat? If you promote the client interest as Kelly, suppose you give a preferential report to Flynn, and because you give a preferential report to Flynn, the Flynn is successful in getting the loan. If Flynn is successful in getting the loan, is that an advocacy threat? Promoting the interest of the client. So if Kelly gives you a preferential report, ignoring the material uncertainty, is that an advocacy threat for Kelly? Tell me. Is Kelly trying to promote the interest of the managing director? So if the managing director gets the loan, how? Has Kelly advocated them? Has Kelly promoted the interest of the Flynn company, right? I hope you all agree with me, right? There is an advocacy threat if you justify that. Advocacy threat, and you get 1 mark here if you justify. Listen to the recording, what I've just explained, right? 1 mark here. So I think you got more than 10 marks already by reaching the point number 6. And finally, the managing director has requested that Mary is part of the review team because of a past. Managing director telling us who to put in the team. Interesting. Why does the managing director want Mary to be in the team? Because the managing director knows that Mary will be reluctant. Mary will not be skeptical. See the managing director point of view. How clever the managing director is. The managing director is telling the audit team to put Mary in the team. Why? Because he knows that Mary will not be skeptical. So is that an interesting statement coming from managing director? Does that demonstrate that the managing director wants things to be concealed up? Last point, point number 7. The managing director wants Mary to be part of the review team and audit team given her past experience. I believe, just 1 minute, sorry, the last point before we get out of this question. The managing director wants Mary to be part of team, knowing she will not be skeptical. She will not be skeptical to review things, as she will have familiarity within the company and reluctant. She will have familiarity in the company and reluctant to review things, as she had previously been in the company. She will be reluctant, right? Because she had been in the company. She had been an internal auditor. She will not be testing the controls. She will not be going against the controls of the company. She knows that controls are good in the company because she had been an internal auditor. So I think a lot of distraction for Mary. And I hope you're getting the point why the managing director wants Mary to be in the team. Because managing director wants a team which is less skeptical. Managing director wants a team which is less questioning. So being in the company, and you get 1 mark here. So I hope you're getting my point here. Did I wrote anything out of the case study? Tell me. And still fetch my 10 marks? Still fetch my 10 marks. I'm just taking it to my support file and putting my, see, this is not a answer, but at least looks like a paragraphed answer here if you look at the screen in front of you. So just giving the bullets here. So when you take a printout, it looks nice. So, so I hope you like this exercise of brainstorming here, all of you. I hope you got some benefits out of it. Now, I cannot write a generic point. I can still write a point of competence. I can still write a point of resource. I can still write the point of deadlines. But see how I linked things with the case study. Now, does the audit firm have competence to offer this review service? Just look at this point here carefully. Let me take you back to the platform. Close this up, close this up. Can you see the screen here? It tells you, you are a manager in Kelly, a firm of chartered certified accountant, which offers a range of assurance services. So do the firm have competence? Yes, because they offer a range of services. So is it a specialized firm? They offer a range of services. So if you develop a point on competence, you have to connect with it. You have to tell that in the context of the case study, it is assumed that Kelly and Company has the desired competence to offer the assurance service because already it is a firm offering diversified services. So that's how you can develop a point on competence, right? I hope you're clear with it, all of you. So Kelly and Company is a competent firm in context. Okay, so that wraps up the answer. That wraps up the question 2A. I hope you're sound enough with what is to be done in the question number 2A. I hope you're sound enough with what examiner was telling you you should not do it. So examiner was saying no money launderings, no corresponding with the previous auditor, and we have not done it at all. We just focused on what was given in the case study, and we tried developing an answer from the case study and in the order of the case study, which is extremely important because a lot of time the student go out of the case study or don't take the approach of the case study when they're writing in the answer. I hope you're all sound enough with this. Can you move on to the next question now? The question number 2B quickly and wrap it up. I will not be solving every question in full. My basic purpose is just to give you an idea which can help you better understand the question and the approach of the question. I hope that's benefiting all of you, right? Is this approach, reading the question, understanding the question, helping you out with it? Okay, let's move on to the next question then, waiting for your answers. Okay, what's the next question? Requirement B. Okay, can you all see the requirement B on the case on the screen now? Practice platform, requirement B. Now there are two requirements, B1 and B2, right? And quite a favorite question of the examining team because questions on forecast, questions on prospective financial information comes so regular. And this is common questions. There is nothing unusual in this question here. So I just might be discussing and skipping. Look at this question on your screen. I'm just copying it, the question here, and just taking it to my word processor. And in the word processor, I write here answer to B, and I copy paste the question here. So this is the first one. This is the second one. This is what I need to do in exam. So B1, evaluate the assumptions, and B2, design the procedures, right? So in the B1, if I can just take things from here now to my word processor for a proper analysis. Okay, question 2B from the September, December 21 exams, right? Let's start the analysis of this and let's see what is the marking scheme for this particular question. I'm just copying the question here. This is the question, right? We have here A and B. Okay, I hope you can see this question now on your screen, right? Let's read it out. Evaluate. Okay, I missed something out from the first question. I will be addressing that shortly as a whole, right? Because the question number 2A was also asking us to evaluate right here. So we need to give a conclusion. I'll come back to it once I wrap up the whole question. So I will give you a conclusion of 2A. And the question number 2B is also asking us to evaluate, conclusion. Evaluate the assumptions used by the management and the completeness of the cash flow forecast prepared, comma, explaining why a particular assumption should be challenged and approached with professional skepticism. Why you believe that the assumption given by the management should be challenged? They should be challenged, right? Firstly, because it's been prepared by management, and management has a risk of management bias. Management might give you a favorable picture, even though they're facing the material uncertainty relating to going concern. The risk of challenging them is higher. And you need to approach them with professional skepticism, because again, in the backdrop, there is a material uncertainty. And you know, the management is desperate for a loan. So when the management is desperate for a loan, even though there is a material uncertainty, do you believe there is a risk that management will overstate the cash inflows and understate the cash outflows? Agree? Why there is a greater need of a professional skepticism? Because the management is desperate for a loan despite material uncertainty. So is there a risk that the cash inflows could be overstated and outflows understated? Is that the reason we should challenge the assumptions? Is that the reason we should approach them with professional skepticism? Are you getting my point, everyone? Good. Okay, we have 6 marks, not much. Let's look at the marking scheme down for 6 marks. For this 6 marks question, what is exactly the examiner asking? Examiner is first asking, evaluate the assumptions used by the management. So we need to evaluate the assumptions used by management, number 1. And that means, sorry, just 1 minute. And the second thing the management examiner wants us, I hope you can see this and here, and every time you see the and, it's important. Evaluate the assumptions, number 1, and completeness of the cash flow forecast. So you need to evaluate the completeness of the cash flow forecast. Evaluate the completeness of the cash flow forecast. They're not the same thing. They're two different things, right? Examiner is saying and. Evaluate the assumptions used by management and evaluate the completeness of the cash flow forecast, explaining why the assumptions you are challenging, why are you challenging the assumptions, and why the assumptions have to be approached with professional skepticism. So that is basically the part of the first requirement. When you say evaluate the assumption, bracket open and bracket close, when you evaluate an assumption and you say this assumption is wrong, then you have to explain why the assumption should be challenged. Why are you challenging the assumption? What is the reason you are saying it's wrong? And why this should be approached with professional skepticism? It should be approached with professional skepticism because the company is already facing a material uncertainty, and the finance and the managing director is not demonstrating the client integrity. We've already discussed that. So why it should be approached with professional skepticism? I think that's quite clear. It should be approached with professional skepticism. I'm using the short form PS. Let me abbreviate that, PS, professional skepticism, so you know what PS is. Okay, it should be approached with PS because the managing director is not demonstrating integrity as seen above in the answer to question 2 part A. This is how you can tell the examiner, no issues with it. Save your time. It should be approached with professional skepticism because the managing director is not demonstrating integrity as seen above in the answer to the question number 2A, plus there are material uncertainties relating to going concern. There are material uncertainties relating to going concern, which material uncertainty relating to going concern, and the managing director is desperate about the $15 million loan, so there is a high risk of overstatement of cash inflows and understatement of cash outflow. You can also write this paragraph which I've just written for you as a conclusion. Evaluate the assumptions, right? So you can write this as a concluding paragraph because it's a sound paragraph, putting everything in a holistic manner. I hope you agree with this paragraph. This is the perspective, right? Why we should challenge them. Do you all agree? Okay, let me show you the Word file. Really sorry if that's not on the screen. Okay, can you all see the Word file now on the screen? Okay, great. So we were just discussing that question, right? Evaluating the assumptions. So when you are evaluating the assumptions, examiner wants two things from you. Evaluate the assumptions used by management, right? Explaining why the particular assumption should be challenged and approached with professional skepticism, number one. Number two, examiner wants you to evaluate the completeness of the cash flow forecast. So why the assumption should be challenged and why the assumption should be approached with professional skepticism. Are you getting the point here? Read this paragraph, read the bullet. Are you clear with this? That is the reason why the particular assumptions given should be challenged and approached with professional skepticism. Can you read the bullet? I've just highlighted the bullet right over here. This bullet, and tell me, are you clear with it? Just waiting for your answers, right? Right. So are you clear with the reason why you should challenge them? Yes, I am just giving you the marking scheme, right? Just wait for 1 minute, Anjali. Okay. And the second thing is that the assumptions given in the cash flow forecast, you will evaluate the assumption. You will challenge the assumption. If there's something wrong, you believe the assumptions are optimistic, or you believe the assumptions are not right, you need to justify why. So each evaluation of the assumption given is worth 1 mark. So there are many assumptions given in the cash flow forecast. I just show you many. You just need to pick some of them and evaluate the assumption. Evaluate means you are justifying what is wrong with the assumption. Evaluate the assumption mean identify what is wrong within the assumption. What is wrong within the assumptions, as assumptions could be unrealistic or optimistic, because the management wants to overstate, right, the cash flow. So they could be optimistic, they could be unrealistic, and that's what you need to justify with 1 mark. I hope you're clear with the first part, right? Is everyone clear with the first part? Evaluate the assumptions used by management. This question has come so many times, right, in the past paper. Whenever you see a question on a prospective financial information, the examiner asks you, evaluate the assumptions. I believe this was even in the December 16 paper. If I'm not wrong, I think that was December 16, question number 3, I guess. Same requirement came in December 16 paper, evaluate the assumptions. December 16, question number 3, if I'm not wrong. The question paper is right, December 16. The question is 3 or 4, I guess, which was on the prospective financial information. Is everyone clear with the first part? Evaluate the assumptions used by management, explaining why the particular assumption should be challenged and approached with professional skepticism. Are you clear with it, all of you? Should we move on to the next one? Okay, great. Next, and the completeness of the cash flow forecast. Examiner wants you to evaluate the completeness of the cash flow forecast. Is there something missing from the cash flow? Is there something missing from the cash flow? For example, management is not mentioning any item of cash outflow. Management is not mentioning any item of cash outflow in the cash flow forecast, which could result in understatement of the cash outflow. Does the management wants to omit an item which results in an outflow? Is that the intention of the management? Completeness. Completeness means something omitted from the cash flow. Now, when you look at the cash flow shortly, you will see lots of things like tax payments. There is no indication of tax payments in the cash outflow because tax is a cash outflow. Management has not given any tax outflows in the cash flows, which is a big omission. Lots of expenses are omitted from the cash flows. That means the management is not giving 100% realistic picture of the cash outflows. They're trying to conceal the cash outflows. So is there something missing? Missing means omission. Omission means completeness. Are you clear? So each point identified, which each missing element identified and explained is worth 1 mark. So how many marks you have in total? You have total 6 marks, which is not much. Total 6 marks divided by 1 mark each. So is equal to 6 points in the total answer. Irrespective, you write more points for assumptions and less points for completeness, or you write more points for completeness and less points for assumptions. The total number of points you need to write is 6. Is that a lengthy answer? Not at all. Are you clear with it? I'll just give you a brief answer quickly, but are you clear with the requirement and the understanding of the requirement? Tell me. Are you clear with the word completeness, all of you? So we can move on to the next requirement. Okay, great. And are you clear with the marking scheme? Okay, great. Okay, let's move on to the next part and then come back and solve the question quickly. Okay, the next part, B1 done. So we have B2. Again, typical part which comes in prospective financial information. You must have practiced it a lot with 15 days remaining for exams. Design the procedures. That's simple, right? You need to design the procedures. So you need to write the procedures to be performed on the cash flow forecast. So you know the procedures have to be case specific, action, source, and purpose. So 9 marks. So you need to write in the procedures, 9 marks divided by 1 mark each procedure is equal to 9 procedures. 9 procedures. And again, I'll do an exercise on that because there's something I need to guide you about procedures of the cash flow forecast, which would be beneficial for all of you. So just wait for that. And you know the procedures from, I think, the previous day, day 2 probably. CASP. I hope you remember the mnemonic for procedures, right? Which is to be applied here as well. So is that clear with question number 2B1, 6 marks, question number 2B2, 9 marks. Let's go back to the practice platform. Let's see exactly what's happening on the practice platform, right? Okay, so we should open the second exhibit, cash flow forecast. I hope you can see the cash flow forecast in front of your screen now. Exhibit number 2. Can you all see this? Please confirm. Okay, thank you. Okay, now the management has prepared a cash flow forecast for 3 years, 20x6, 20x7, and 20x8, 3 years forecast, because that's what the bank wants from you. And they have broken the forecast into 6 months, 6 months to December, 6 months to June, 6 months to December, 6 months to June, 6 months to December, 6 months to June. So they've broken the 3-year cash flow into 6 months each. So that's how they've presented the cash flow on the request of the bank. Now in the cash flow, they have given some note numbers. I hope you can see the note numbers here. The note numbers are basically the assumptions. So you will look at the assumption. If for every note number, which is every assumption, you write 1 point challenging the assumption. So straight away you get 4 marks, right? Every assumption, 1 point minimum. So on every assumption, if you write 1 point minimum, how many marks are you getting out of 6? 4. Then you can write 2 points on the completeness of the cash flow. If you believe something is missing from the cash flow, right? Okay, let's go back and start looking at the assumption. The first assumption is for the average monthly sales. And you can see the average monthly sales increasing from 200 to 234. This is average monthly sales, right? 200 to 234 to 265 to 288 to 308 and to 318. So in every 6 months, the monthly sales is increasing, right? It could be optimistic. It could be unrealistic because the management wants to overstate the cash inflows. And that's one reason, right? The total revenue for 6 months, this is average, right? Look at the total revenue for 6 months, 1200, 200 divided by 6. So that's the 6 months revenue. Then 1404, 1589, 1727, 1846, and 1909. So that's the total 6 months revenue, which is showing a rising trend. Let's look at the assumption of sales. You go down and you look at the assumption for sale. Assumptions. Management, monthly sales are based on management forecast with predicted sales growth as follow. 6 months to December 20x5, 0%. So management believes there will be no growth in the first 6 months to 20x5, December 20x5. So this means this December 20x5 sales 200 is similar to the last 6 months, which is not shown to us, right? Then the 6 months to June, the sales will rise by 17%, then the sales will rise by 13%, then the sales will rise by 8%, then the sales will rise by 6%, then the sales will rise by 3%. So every 6 months, the sales is rising, but the rise is on a declining trend, but they are rising from 17% to 3.5%. Now, sales are expected to increase in 20x6 when the new processing facility opens in Farland. So they're opening a new plant in Farland, right, for which they're taking a loan. So when they believe when the new processing plant will be opened in 20x6, the sales will automatically increase. So for the first 6 months, the sales does not increase, but when the new plant will open up, the sales will automatically increase from 30th of June 20x6 by 17%. The new product range are expected to be very popular. This is an assumption. They might not be. The management is taking an assumption that the new product range are expected to be very popular. Have they done any market research? You can convert this to a procedure, right? Has the management undertaken any market research, any customer survey? What is the basis? What is the basis they're expected to be very popular? You can convert this to a procedure. And the product launch will be supported by an advertising campaign. You will be supporting the launch with an advertising campaign. Not necessarily the campaign is successful. In addition to the output from the new production facility, production levels at the existing facilities are planned to increase by at least 10%. So you will be increasing your production capacity by 10 alongside the new production facility coming up, and you believe sales will increase because the customer will like your product. Assumption. The advertising campaign will be good. That's an assumption. Could be wrong. And the sales are expected to increase when the new facility opens up in Farland. And the first increase is 17% after the opening of the production facility. Now, this is something interesting. Look at this. The new production facility is planned to commence on 31st of March. When will the new production facility commence? 31st of March, right? So that technically means from the 1st of April, right? From the 1st of April, the extra sales will come in. The extra sales will come in from the 1st of April. What is the 6 month ending here? The 6 month ending here is 30th of June. So from April to May to June, how many months are there? 3. So the production facility will start from the 1st of April 20x6. And by the 30th of June 20x6, how many months are there? 3. How much sales do you expect to rise in those 3 months? 17%. 6 months to 30th of June. So in 6 months to 30th of June, your production facility will only be available for 3 months. The new production facility will only be available for 3 months. And in 3 months, a 17% rise in sales is too much. Management believe products will be successful. The people will like your products. These are optimistic assumptions, which might be wrong. So are you clear that the 17% looks too much optimistic here? All of you, are you getting my point? How I linked the assumption number 1 with the assumption number 4, that the new production facility will commence from the 31st of March 2026. And what if the new production facility failed to commence from 31st of March? There is a delay. There is a delay in getting the production facility ready. What if the loan gets dispersed later? There are so many assumptions which are going in. When you expect the loan to come to you, we were reading it here somewhere, right? When you expect the loan to come to you on the 5th of August 20x5, even if you get the loan in August 20x5, even if you get the loan in August 20x5 and you start to make the new production facility in a new country, so August you get the loan 20x5, August, September, October, November, December, January, February, March. How much time? 8 months. And you believe in 8 months, the new production facility will be ready in a new country, in a foreign country. You have no understanding of the foreign country. There might be some bottlenecks. There might be some delays. What if the loan gets dispersed in September, not in August? So do you believe there are assumptions which needs to be evaluated critically? So are you with me, all of you? So when they intend to complete the production plant, 31st of March. So in how much time they expect the plant will be completed? Tell me. In how much time they expect the plant to be completed? If they get the loan in August, 8 months. Is that realistic for a plant to be made in 8 months in a new country, considering the loan can get late? The manufacturing of the plant gets late? Or are we believing whatever the management is saying is right? Whatever the management is saying is true? No, these are assumptions. Okay, and how much will sales increase in the first 6 months after the launch of the new plant? 17%. But when will the sales start to rise? From April, right? I hope you're getting my point. April, May, June. In 3 months, the sales will rise by 17%. Is that a lot? Yes. So you need to evaluate the assumptions. I hope you're getting the point, how to evaluate these assumptions critically. Right? So you look at every assumption and you evaluate the assumptions. There are so many assumptions given under. Look at the cash flow forecast in front of your screen. Can you see some tax payments here? Can you see some tax payments? No. Missing. Marketing. They're incurring only 100 on marketing. That's in 6 months to June. And on the basis of just $100,000 marketing in just 6 months, they're expecting the sales to rise and rise and rise and rise. I believe either the marketing expense is understated or there is something of an omission here, because with just $100, they expect things to rise and rise and rise and rise. So probably either you are understating the marketing expense or there is something misallocated here. Are you getting my point here? Are you agree with my point here? So the marketing expense is just $100,000. And with that just $100,000, they're increasing the sales. So can you see there is a visible evidence of an understatement of the outflows and overstatement of the inflows? The inflows are overstated. The outflows are understated. So you can comment on that, right? For 1 mark. And another interesting phenomena, look at the interest payments. Look at the interest payments and the finance cost. 30, 30, 30, 30, 30, 30. You are taking a new loan of a $15 million. You might already be having an old loan in your balance sheet. And the interest payment and the finance cost is static. 30, 30, 30, 30. Seems you have understated them. With a new loan of a $15 million coming in, do you expect the finance cost to rise? Do you expect the finance cost to surge? Because you must already be having old loans. You must already be having long-term loans in your balance sheet. So are you getting the point of understatement in finance cost? Everyone? Are you clear? So can you evaluate the assumptions? Can you identify the missing elements? They are opening up a new plant. What about the staff training cost of the new plant? Can you see the staff training cost anywhere? Can you see the staff training cost anywhere in the operating expenses? We're not sure. Are they visible? What if the management has not included the staff training cost in the operating expenses? And the management believe, look at this point here. Operating expenses are forecast to increase, full stop. The company is expecting to benefit from the economies of scale as the production increases at each processing facility. How can you expect an economy of scale within a new production plant, which is to open on 31st of March 2026? How quickly can an economy of scale come in? Do we expect an economy of scale to come from the very first day of the new production plant? I believe the economy of scale takes time, right? And your new production plant will take time to reach the economy of scales. But the management believe that the economy of scales increase at each production facility. How? How can it increase at a new production facility when it's new? So I believe the stance of economy of scale is to be evaluated with skepticism. Is that clear to all of you? Will you be going down, evaluating the assumptions and making procedures? Just to save my time, I just wrote some answer, which I just want to share with you. So you exactly know how to go down making up the answer. Just let me show you the way to produce the answer. I hope you can see the support file in front of your screen now. Can you all see the support file? Just want to give you some suggested way to write an answer. Suggested way to write an answer. So you can pick up the track. Write an answer. So we're writing an answer first for question number 2B, 1, which is for 6 marks. And see, this is the way I wrote the answer. If you can see on the screen now. Just let me read it for you and tell you what is the purpose of writing this answer and how you get marks. See, the first thing is the sales figure, right, in the exam. So I made the heading sales figure and I wrote my evaluation. Number 1, the forecast of monthly sales figure appears over optimistic. They appear overly optimistic. Example, the expected revenue growth of 17% in the period to 30th of June 2026 appears optimistic. Given that the new production facility is only expected to open in March 2026. Did I discuss this point with you? Considering that the production facility will open at the end of March 2026, and in just 3 months, you expect the sales to rise by 17%. This is my first evaluation, and I will get 1 mark here. 1 mark. My second evaluation is, even if the processing plant is ready by the 31st of March, even if it is ready by the 31st of March, as stated in the forecast assumption, it only leaves 3 months for a very significant increase in sales resulting from the new product ranges produced at the plant to be achieved. Do you believe that in 3 months, 17% surge is realistic? So you are very critical of the management timelines. You're very critical of the management timelines given in the assumption. And what if the new product range are not liked by the customer? The new product range produced are not liked by the customer. They dislike your products. What will then happen? You can make another evaluation on the liking of the product range, and you get 1 mark here. Next, the advertising cost included in one period. However, the sale figure increased throughout the forecast. It is possible that additional marketing costs have been omitted or the increase in sales is overshot. Either you have omitted the marketing cost, understatement of the cash outflows, or you have overstated the sales because you're just incurring a marketing cost of $100,000. The advertising costs are only included in one period, and that too of just $100,000. That too just of $100,000. So either there is an understatement of a marketing cost, or there is an overstatement of sales, and you get 1 mark here. 3 marks out of 6. So are you getting the fact of how to evaluate everyone? Are you clear? Will you carry on the rest of the answer in evaluating the assumptions? So you need to be critical. You need to be skeptical when you are evaluating the assumptions used by management. Is that clear? All of you? Is the answer making sense? Good, thank you. The next, commencement of operation, new plant, another one. Assuming that the loan is advanced in August 20x5, this allows only 7 months for the construction and fitting of the new processing plant, which seems a very short time frame for this to take place. Management may be over optimistic in how quickly the plant can be constructed. In August, you get the loan, and in 7 months to March, the plant is ready. How can that be possible? I believe you're going at a very super speed. At a very super speed, you complete the plant in 7 months with everything done. So I think management is very optimistic here that the plant will be ready in 7 months, which seems wrong. 1 mark. In addition, there is no cash flow specific to the factory startup cost. There is no expense on the startup cost of the factory. Example, staff recruitment. There is no staff recruitment cost, no staff training cost included in the cash flow forecast. So there is no staff training cost, no staff recruitment cost. You're setting up a new factory. There are so many expenditures that you need to incur on a new factory. Nothing has been given. Understatement of the cash outflows. There is a possibility that these costs have been omitted in error or deliberately in order to show a better cash flow forecast, because the company is already facing a material uncertainty relating to a going concern. They don't want to put a bad liquidity picture. So I believe there is lots of elements which are missing from the cash flow forecast. 1 mark. This is completeness, right? This is completeness. Are you all clear with it? So already I've demonstrated like 5 marks to you out of 6. I hope we can continue wrapping up the rest of the answer, right? Clear? Should we move on to the procedures? B2. Should we write the answer for B2 procedures? Need to guide you something about procedures. Procedures. Let's write that down quickly. Question number 2, B2. We have 9 marks for procedures. Let's give you a track and then you follow the track. I hope you can follow the track for the first requirement for 6 marks. Am I right? Are you on the track what to do in the question number 2B1 for 6 marks? Are you all clear? Will you be able to draft the answer? Okay, that's good enough, right? Let's move on. Procedures for 9 marks. Okay, now whenever you're writing a procedure on a cash flow forecast or you're writing a procedure on a profit forecast, you get to write procedures on a forecasting exam, which is very favorite topic of the examiner. What can you do good? First of all, you need to write procedures which are from the assumptions given. So when you are writing the procedures on a forecast, procedures on a forecast, whatever the forecast is, currently it's the cash flow forecast, right? Procedure on a forecast, focus on procedures first, which are linkable to the assumptions given. So try to link the procedures first on the assumptions given. Convert the assumptions to procedures. Focus on procedures first, which are linkable to the assumptions given. Later, you can write some generic forecast procedures, just like one or two, not more, as examiner don't want rote learn procedures to dominate specific procedures. The examiner answers, when you even look at the examiner answer also contain rote learn procedures for forecast. But when you are writing 9 procedures, you cannot write 6 rote learn procedures. Very bad, very bad. In your total list of 9 procedures, you can just have 2 procedures which are like generic procedures on forecast, but the 7 of them has to be specific. That is good. But if majority of your procedures are rote learn and only few are specific to the assumptions, very bad. So even when you evaluate the answers of the examiner, if I can just show you that for clarity, just 1 minute. I believe I have examiner answers here. Can you see in front of your screen the examiner answers? Can you see this? Can all of you see this? Please confirm me. Can you see the examiner answers? Okay, thank you. Look at this first one here. Look at this one. Recast the forecast to ensure it's arithmetically correct. This is journal procedure. This is journal procedure. Now, you can write it, but it's not the way that you write too many journal procedures. Why is the examiner giving you too many journal procedure? Because he's giving you guidance. See how many procedures has the examiner written for 9 marks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30 procedures. And you say, oh, for a 9 marks answer, we need to write 30 procedures. Why? Because I saw the examiner answer. This is such a major misconception. You need to understand that examiner writes more because the examiner wants to tell you that this could also had been a procedure, this could also had been a procedure, this could also had been a procedure, this could also had been a procedure. Examiner is giving you all possible procedures which are doable. But how many you need to write for a 9 marks answer? Only 9. Why is the examiner giving you 30? To learn that, okay, I can also do this. Oh, I can also do this. Oh, I can also do this. I can also do this. You can learn them. But in the actual context, how many are you writing? 9. So examiner answers are lengthy because they are tutorial guidance. And I've been guiding on this for years now. You must have heard this somewhere on my YouTube channel. These are tutorial guidance. You need to stick to maximum 9 procedures. Maximum 9. Right? Is that clear? Because every procedure is worth one. But can you learn from them? See these procedures in the end. These are journal procedures. Look at this. Assess the competence and experience of the preparer of the forecast. Who prepared the forecast? Assess the competence who prepared the forecast in order to assess the credibility of the forecast. This is journal procedure. Cast the forecast, one journal procedure. Assess the competence who prepared it, second journal procedure. Confirm the consistency of the accounting policies used in the preparation of the forecast versus the last year. Has the management changed any accounting policies? Are the accounting policies consistent with the last year? Because if the management is preparing a forecast and they change the accounting policy, that will also have an impact on the inflows and outflows. So is the accounting policies fine with the last year? Journal procedure. Next, look at this. Review the outcome of the previous management forecast versus the actual results. If the management has previously made any forecast, what was the actual result? What was the variance between the actual and the forecast last time? If the variance is less, can we rely on the forecast prepared by the management? So these are journal procedures, right? Look at these journal procedures. If I just copy them from here, 1, 2, 3, and take it back to the Word file, because I need to show the criticism of the examiner. Now, even when you look at the examiner answer, examiner do write journal procedures for forecast like as follow, taken from examiner answer to September, December 21. I've just taken it directly from the examiner answer, right? Control V. See this, the first procedure of the examiner, second procedure of the examiner, third procedure of the examiner, and the fourth, 3 of them, right? Can you see them on the screen now? The 3, I've just taken it from the examiner answer because I want to show you the criticism now. Can you all see that? 3 of them on screen, Word file. Okay, good. Look at the fourth one. What was the fourth one from the examiner answer? Recast. Recast the cash flow forecast for arithmetical accuracy. That was the first one I've shown you, right? Forecast for arithmetical accuracy. Now, out of 9 procedures, if I write 4 procedures on the screen, and then I go to number 5, and I write the number 5th procedure from the case, I write the number 6th procedure from the case, number 7th from the case, number 8th from the case, number 9th from the case. I think examiner would not like an equation where 5 procedures are from the case and 4 of them are rote learn. You need to reduce the rote learn content. My suggestion is maximum 2 rote learn procedures when you're developing a list of 9. When you're developing a list of 9, just maximum 2 rote learn procedure. Is that clear? But don't get distracted with examiner answer saying, oh, examiner writes so many journal procedure. Look at the list of examiner, 30. In a list of 30, how many journal procedures the examiner wrote? 4. Divide 4 by 30. Divide 4 by 30 to identify what is the percentage of a rote learn procedure in a total list of 30. Can anyone give me the answer quickly? Examiner wrote a total 30 procedures, right? 4 divided by 30. Try to find the percentage of journal procedures in a total answer to examiner. Tell me quickly. 4 divided by 30. What's the answer? Anyone using the calculator? 13%. 13%. So in the examiner answered, what is the percentage of a journal procedure? Only 13. Now find the 13% of 9 procedures. Find the 13% of a 9 procedure. 9 divided by 13%. 1. That's a good answer, Saleha. So maximum 2, right? Maximum 2. I hope you're getting the point here. So if any student write 4 journal procedures in a 9 marks answer, are you irritating the examiner or are you making the examiner happy? Tell me. Are you making examiner happy or irritating? Irritating. So when you review the examiner answers, you need intelligence, which student normally don't demonstrate. They just, you look at what, if I talk to 10 students, they will tell me, oh, we looked at the length of the answer, such a big answer, such a good answer. How can we write a big answer like examiner? How can we even write a bigger than examiner answer? If you are living in that hypothetical assumptions, if you're living in that illusions, you can never pass the AAA paper. Examiner answers are bigger, lengthier, because examiner is giving you a guidance that you can do this, 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 you can do this. But you need to look at the number of marks you have. So can I do 30 procedures for a 9 marks answer? Tell me. No. Can I write for a 24 marks audit risk question? Can I write 12 risk, 14 risk, 16 risk? When you see an answer of examiner for 24 marks audit risk, examiner might have written 15 risk, 16 risk. And you say, oh, I have to write 16 risk as well. No. Try to learn good things from the examiner answer, not the length, not the number of points, Not, oh, examiner writes a journal procedure, I will also write the journal procedure. But look at the percentage of the journal procedure the examiner is writing, right? I think Salia gave me the answer, 13.3%, or someone else, 13.3%. So if you find the 13.3% of a 9 procedure, that's one only. So please be very critical of here. These are journal procedures. These are journal procedures in yellow. But what is the note number here? The note is, please ensure that journal procedures are not more than 10% of your total answer. 10%, not even 13, 10% of your total answer. Journal procedures are not more than 10% of your total answer. In this 9 marks, you can maximum stretch to 2. You can maximum stretch to 2 journal procedures only. Right? Be flexible. 10, not more than 10 to 13% of your answer should be on journal procedure. Is that clear? Is this note number clear to all of you? Will you stick to this note number? Right? Okay, one last thing, and we're moving out of this case study. I hope you can write the procedures yourself. By this point in time, you must have already done the exercise. You can question management assumptions. You can ask them that what is the basis, why a certain cost is not included in the cash flow forecast. You can do a lot of discussions, right? Just one criticism of the examiner, and moving to the question number 3 then. Examiner report. Okay. Can you see the examiner report in front of your screen for question number 2, Kelly? Please confirm that. Can you see the question number 2, Kelly, in front of your screen? Okay, we are looking at the second part, right? So I'll go down and down and down till the time we reach the requirement of 15. Okay, can you see the question we are doing? B part 15, design the procedures and evaluate the assumptions. Can you see that in front of your screen? I just want to show you the criticism of examiner on procedures. Okay, right here. Can you see this yellow paragraph here? The first on your screen. The second part of the requirement was to design the procedures for use when reviewing the cash flow forecast. This area was generally well covered and is typical well answered by candidates who have practiced past papers of this nature, because this question comes a lot. Candidates should note, however, that as far as possible, procedures should be applied to the specific information in the forecast and information provided. So what is the priority the examiner wants from you? Procedures should be applied to the specific information in the forecast and information provided. Now understand my mnemonic. What is the first letter of my mnemonic? C. Case specific. Not my first letter of the mnemonic is not R, rote learning. My first letter of the mnemonic is C. Procedures should be applied to the specific information in the forecast, comma, rather than a pre-learned list of procedures. So examiner is saying rather than a pre-learned list of procedures that apply to all forecast reviews. So he's not happy with it. Example, he's giving example of a pre-learned material. Example, casting the forecast. Examiner is using it. But examiner is saying the student learn this list and write maximum. Can you write cast the forecast? Yes. But in a list of 9, it should maximum be 2. Cast the forecast, assess the accuracy of the past forecast, assess the competence of the preparer. Now, wasn't the examiner writing all 3 of them in the 30 marks in the 30 list, in the list of 30, tell me? Wasn't the examiner writing this 3 in the list of 30? But what was the percentage of it? Were they dominating the list of 30? Were they dominating the list of 30? Were they a majority part of the list of 30? No. So try to understand the wording of the examiner here. He's not refraining you from writing the rote learn procedures in the case of a forecast, but that should be a minority part of your total answer. Is that clear to all of you? Candidates should note that giving an answer learned from the past exam question will not demonstrate the application skill. So if you just wrote learn the answer from September, December 21, and another question comes on a cash flow forecast and you directly copy paste the answer, that's wrong. Examiner is not liking that. Examiner is saying the student learned the answers from the past answers and then they copy paste the answer to the next exam sitting. He's not liking that. So I hope you read the examiner reports, because examiner reports do have a very constructive feedback, right? So this is a very, very important feedback from the examiner report, which I'm just putting on my support file and exiting from this question. Please ensure you complete the answer for this 9 marks. This is the examiner criticism, which I'm just putting right over here. So when you read, when you take a printout of this, it's directly with you right here. Is that clear? Will this help you, the examiner criticism, when you take a printout? And I hope you will understand what I was trying to say in the last 15 minutes. Have I given you clarity on this? Is there any misunderstanding which I've created among all of you? Or have I given you clarity on the subject matter? Are you all clear? Okay, let's move on to the last question for the session today, day 3. We are now venturing into the question number 3, the final question of the exam paper, which ideally has to be from syllabus area E. Question 3 of the September-December 21 exams. And we know that one of the question in this section B has to be from syllabus area E, completion and reporting. So the question number 2 was not on it. The question number 2 was from the syllabus area F. So ideally, now the question will be from syllabus area E, completion and reporting. Let's see what was the question in the current exam setting. I'm not giving you a break because we just left with like 37 minutes for the end of the session. So I just want to consume the 37 minutes on the last question. Okay, can you see the practice platform on your screen again? And again, I didn't use the spreadsheet, right? I'm totally writing my answer on a word processor and I'm doing my calculations on the calculators. So I'm totally relying on a word processor as the only source to write the answer. Okay, let's move on to the next question. Question number 3. Can you see the question number 3 in front of your screen now, the practice platform? Okay, let's look at it. Let's spend 5 minutes on reading the question and then analysis. Please confirm, can you see the practice platform, question 3 in front of your screen, so I can start proceedings? Okay, thank you. Okay, just so sorry, just let me go back. Support file before I start the question number 3. Just give me 2 minutes before I start the question number 3. Conclusion. Now, when you are looking at a question number 2, and the question number 2 was asking you evaluate the matters to be considered in accepting Flynn as a client and to perform the review engagement. Now, you've seen so many factors, ethical issues, client integrity issues, the client trying to give you a bribe, an incentive. You had competence because you are a diversified firm, etc. So when you give a conclusion of the question number 2A, when you wrap up the answer, at the end of the answer, you write a heading, conclusion, like this. In the question number 1, the conclusion has to come at the end of the answer, because in the question number 1, you are formulating a briefing note. So in a briefing note, the conclusion has to come towards the end, not in the middle. But when you are doing question number 2A, and it says evaluate, you will give a conclusion at the end of the answer to 2A. Then 2B. The 2B says evaluate, so we'll give a conclusion at the end of the answer 2B. I hope you're clear with that. Conclusion just need to be 2 sentences, right? Not lengthy. Conclusion is just a summary of what you have discussed above. So conclusion, should we accept Flynn as a client and offer them the service to review business plans? So you're giving a conclusion, a diplomatic one. See how. There are several client integrity issues. There are several client integrity issues with Flynn management, even though the audit firm has the necessary skills and resources to offer the review service. There are several client integrity issues with Flynn management and ethical issues as well, comma, even though the audit firm has necessary skills and resources to offer the review service. Therefore, the decision to accept Flynn and the review services and the review service should be carefully taken, ensuring adequate safeguards are put in place, ensuring adequate actions and safeguards are taken by Kelly to reduce the overall risk in the engagement. See my conclusion, just a short paragraph, 2 sentences. I'm saying there are several client integrity issues, I'm not repeating them, and ethical issues. However, as an audit firm, we do have competence because we were a chartered certified accountant offering a range of services, and we have the resources to offer the review service. Therefore, the decision to accept Flynn and to offer them the review services should be carefully taken. I'm not giving my decision, I'm diplomatic, with adequate actions and safeguards. If I take the proper safeguards, I can overcome the ethical issues. And if I do a proper discussion with the managing director and ask the managing director that there is no need to intimidate me, or I can bring clarity to the material uncertainty point, then I can proceed with the decision. So ensuring adequate actions and safeguards are taken, I can proceed on with the engagement. Conclusion. Part of journal professionalism. An examiner says at times examiner even reward you 1 mark for a conclusion, even sometimes. So examining team can even reward you with 1 mark for giving a conclusion when the question is asking you to evaluate. So it's better to give it. Is that clear to all of you? Can we move to the conclusion of the 2B? This was the conclusion of 2A, right? Let's go down, write a conclusion for 2B. Okay, in the 2B, it was asking us to evaluate the assumptions. Sorry, it was asking us to evaluate the assumptions and completeness of the forecast. So we give conclusion before the procedures, right? So before you write up procedures, you give conclusion for 2B. So I was writing the answer for 2B1 here. So I will give my conclusion here. Conclusion after the 2B, right? So my conclusion will be above the procedures. Conclusion. The assumptions used by Flynn Company in preparing cash flow forecast, the assumptions used by Flynn in preparing the cash flow forecast seems to be over optimistic, as some of the assumptions are based on, seems to be over optimistic in some cases, and there seems to be number of cash outflows which are missing from the forecast, which could possibly be due to the fact that the company wants to present a better cash flow to secure loan, and there might be deliberate omissions of outflows. There might be deliberate omissions from management. That is it. So you're concluding on the evaluation. You're saying the assumptions used by Flynn seems to be over optimistic. You're not saying where. In some cases, as you've done them above, and there seems to be a number of outflows missing, which could possibly be due to the fact that the company wants to present a better picture of cash flows to secure a loan, and there might be deliberate omissions from the management. Full stop. Conclusion. So you have to give conclusions. We're asked to evaluate, but in the briefing note, you will give conclusion at the end of the briefing note, not with every requirement, not with every requirement. I hope you're clear with that, right? Okay, now can we move on to the question number 3? Thank you very much for reminding that I have to give you a conclusion. So some of the students are still mentally present in the live session, and thank you for reminding for the case, right? I think that was Valentine, right? The student reminding me to give a conclusion. I hope you're satisfied with that, Valentine, and the rest of the students. Now, can we move on to the next one? Question number 3, right? Back to the platform. I hope you can see the platform on screen. Question number 3, please confirm quickly, running short of time. Can you see the question number 3 on your screen now? Platform. Okay, good. Let's read it out. Okay, thank you. It is the 1st of July. You are a manager in Sol & Company, a firm of chartered certified accountants. So the name of the audit firm is Sol. You are currently working on 2 clients. So you're currently working on 2 clients as a manager. Let's see what they are. One client is Urgent & Company, and the other client is Brannaby Company, right? And on the left-hand side of the screen, you can see there is an exhibit for Urgent Company. There is an exhibit for Brannaby Company. So that means one requirement will be for Urgent, one requirement will be for Brannaby Company. Okay. Both are manufacturing companies with the financial year end of 31st of March. Both audits are in completion phase, and you are in process of reviewing the audit file. So see, this question is on the completion and reporting stage. Both audits are at the stage of completion, and you are currently reviewing the working papers. So that question is set at the stage of completion and reporting. The following exhibits are available on the left-hand side of the screen. Urgent Company, selected results of the subsequent events, and the final analytical procedure, which were performed by the audit team. So for the Urgent Company, the examiner has given us the results of the subsequent events and the results of the analytical procedures, which has been performed by the audit team. And we know that the audit team do perform a subsequent review at the completion stage of the audit to ensure that all adjusting and non-adjusting events are incorporated. And the audit team even perform a final analytical review at the completion stage of the audit to ensure that any unusual fluctuation from the last year to the current year, the auditor has sufficient appropriate audit evidence for that. And for the Brannaby Company, a copy of the schedule of the uncorrected misstatements have been recorded during the audit. So that's like a typical reporting question, right? Schedule of an uncorrected misstatement. We've seen that so many times in the past paper. Schedule of uncorrected misstatement for a Brannaby Company, and what is the impact of the misstatements on the audit opinion? That's a typical question. So we have one situation for audit report, Brannaby Company and Urgent Company. Let's see what is the requirement for Urgent Company for analytical procedures and subsequent event review. You go to the left-hand side of the screen, you open the requirement A. The requirement A is for the Urgent Company. You open the requirement A, and right here, examiner is telling you, using the exhibit 1 Urgent Company. So the requirement A is for Urgent Company. In the section B, each requirement relates to one exhibit. So the first requirement relates with the exhibit 1, the second relates with exhibit 2. That's more easy to pick up. That was exactly what we were doing in the question number 2 even. So using the exhibit 1 Urgent Company, what you need to do? You need to do A1 and you need to do A2, and you have total 15 marks. Control C, open up the word processor, and in the word processor, you write the answer. You say, okay, question 3, and you copy down here, A1 and A2. That's what you need to do. And the total number of marks you have is 15. Now you need to fill up the answer for A1 and A2, and the 15 marks are there. So let's go back and see what the examiner is telling, what we need to write on the word processor. Okay, on the word processor, question number 3A, and I'm copying it here. Can you all see the question number now on the word on the support file? Okay, just 1 minute. Can you see the support file now? Okay, good. So what is to be done in first case? Urgent company, right? Exhibit 1. Evaluate the results of, again, evaluate, conclusion, the results of the subsequent events given in the exhibit 1 and the final analytical procedures. So you need to evaluate the results given, but what do you need to do when you're evaluating the results? What you need to do, how you need to evaluate. So after the comma, the examiner is telling us how you need to evaluate. Evaluate the results by commenting on any inconsistency in relation to the evidence gathered. So you need to comment on any inconsistency in relation to the evidence gathered. So for the first question, the requirement is pretty simple. What you need to do, you need to evaluate conclusion. But when you're evaluating, what are you doing? You need to evaluate the results given in exhibit 1, the results of subsequent events and the results of the analytical procedures. But when you are evaluating the results, you need to comment on any inconsistency in relation to the evidence gathered. And every comment you do, 1 mark per comment. 1 mark per comment on each inconsistency identified and commented on. Right? Is that clear? Is that a typical question which comes in the past paper? Comment on the sufficiency and appropriateness of the evidence. How many times have you seen this question in the past paper? This is not a new requirement. This is a very favorite old requirement of the examiner, right? And it comes so many times in the past paper. Even in the December 16 paper, question number 2, comment on the sufficiency and appropriateness of the evidence. I hope you've seen this terminology while you were practicing the past papers, everyone. Comment on the sufficiency and appropriateness of the evidence, or comment on the inconsistency in relation to the evidence found. So when you read the exhibit 1 of urgent company, will the examiner give you the evidence gathered by the audit team? Then only can you find the inconsistency. Will the examining team give you the evidence gathered by the audit team? And you need to judge what is the inconsistency in the evidence. What is the problem with the evidence, right? So 1 mark per comment. Last thing. In the case, the examiner will give you the evidence gathered by the team, and you need to comment whether the evidence is inconsistent or not. So you need to comment whether it is inconsistent or not. So you will read the case, you will see the evidence gathered by the team. There is another question which comes, right, which says, explain the audit evidence in the working paper file. Then you need to write the evidence yourself, right? Copy of this and results of this and something like that. But this is a different question, right? In this question, the evidence has already been gathered, and you need to judge, or you need to evaluate whether the evidence gathered is consistent or not, is sufficient or not. I hope you're clear with the first part, A1. Can you move to the next one, A2, before we get back to the case study and read it? A2. Recommend further actions. So what you need to recommend? Further actions to be taken if there is any inconsistency in the evidence, comma, including suitable audit procedures, which will enable the auditor to reach conclusion. 15 marks in total for A1 and A2. So you need to write actions and you need to write procedures in the second part of the requirement. Actions and procedures to be taken. Irrespective you write action or irrespective you write procedure. You're not bifurcating them. Okay, this is an action, this is a procedure. No, you will get confused. Whatever you're writing, whether it is an action or a procedure, you will get 1 mark. So 1 mark per action and 1 mark per procedure. And the action has to start with an action as well, right? The action has to start with a verb and has to be specific to the case study. So 15 marks, right? Now you look at the number of issues in the case because everything you do in this answer will fetch you 1 mark. So the total number of points you should have in the answer, whether they are actions, whether they are procedures, or whether they are comment on the inconsistency, the total number of points should be 15, right? Note, for a 15 marks answer, your total number of points in the answer should be 15, irrespective of whether they are procedures or actions or comments on inconsistency. Is that clear? So you can have more comments on inconsistency, less actions and less procedures, or you can have more actions and procedures and less comment on inconsistencies, but the total number of points you should have is 15. Is that clear? And procedures and actions are written in bullets, right? Procedures and actions are written in bullets. So that will save time in bullets, and the comments will be in para, form. Is that clear to all of you? Can we move on to the next question and understanding of that before we come back with the answer plan? Right? So that's what you need to do here, right? Okay, let's jump to the next question and then come back reading the case study. Question number 3B, which is about the next company, Exhibit 2. Let's start with question number 3B. I'll complete my analysis of the papers first, and then I'll go writing the answer. So 3A done, 3B now. Back to the portal platform. I hope you can see the platform again. We can go to the second requirement for a Branham B company. I hope you can see the requirement for Branham B company now on the screen, right? Typical requirements, multiple times in the past papers. Favorite question of the examiner on reporting. Recommend and explain the methods which should be discussed with management in relation to each of the uncorrected misstatement, including an assessment of their individual impact on the audit opinion. Individual, not aggregate, individual impact if the management does not make changes. 10 marks, where the examiner is saying there are 6 marks for grant and 4 marks for machine. So Control C, you take it back to the word processor, and in the word processor, you say, okay, this is the B requirement now, and this is what the examiner wants to be done in the B requirement, and you set up the answer in the exam paper. Please ensure you look at the note number carefully, because the note number is telling you you have 6 marks for grant and 4 marks for machine. Okay, let's take back this to my support file. Just 1 minute. On the support file, I hope you can see it back on your screen now. This is what the examiner wants to be done. We have total of 10 marks, and the examiner is saying this is how 10 marks are divided. Do you agree this is a typical question in the past papers? But you don't understand it much as students. Recommend and explain the methods which should be discussed. Matters which should be discussed with whom? With management. Matters which should be discussed with management in relation to each of the uncorrected misstatement. Now, when you have a misstatement and you want to discuss the matters relating to uncorrected misstatements with management, what exactly those matters are, including an assessment of the individual impact on the opinion. Aggregate impact? No. If you give an aggregate impact, are you wasting your time? Is the examiner asking for an aggregate impact? No. So if you give the aggregate impact, are you wasting your time? Yes. If management does not make changes. So what is the question asking for? The question is asking for, number one, matters to be discussed with management in relation to each of the uncorrected misstatement. Now, misstatement means an accounting issue, true, false. Misstatement means an accounting issue, true, false. True, right? So matters to be discussed with management in relation to each of the uncorrected misstatement. And secondly, individual impact on the audit opinion of each misstatement. Everything is worth 1 mark, right, in a reporting question. So matters to be discussed with management in relation to an uncorrected misstatement. The very first matter, because it is a misstatement, so the very first matter you need to consider is comment on materiality, and you get 1 mark straight away. Then another matter you need to discuss with management is the accounting treatment. The accounting treatment, comment on the accounting treatment. Comment on the accounting treatment, and you fetch 1 mark for commenting on the accounting treatment. Then because it's a misstatement, that means the management has done the wrong accounting treatment. So you are telling management the right accounting treatment. So comment on the accounting treatment, the right one, because for sure management has done the wrong treatment because it's a misstatement. So you comment on the right accounting treatment. Then because it's a misstatement, so you tell management the impact on the financial statement, what is understated, what is under, and what is overstated, because it's a misstatement, right? So you're telling management that currently this is understated and currently this is overstated because this is a misstatement. So you're discussing with the management the impact on the financial statements, not on the opinion, right? Impact on the financial statement. So first you comment on the materiality, then you comment on the accounting treatment, then you comment on the financial statement impact. 3, matters to be discussed in relation with this. The further matter you need to discuss with the management is the need to correct it. The need to correct it to show a true and fair view of financial statement. You need to discuss with management the need to correct the misstatement to show a true and fair view of the financial statement. Now, if the management is not listening to you, examiner is saying, assuming that the management does not make changes, then what is to happen? Now, after doing the answer for matters, we are assuming that the management is not listening to you. Then you come to individual impact on the financial statement. You will tell firstly individual impact on the opinion, because you've already mentioned the materiality, so no need to repeat it. So you will conclude that whether the matter is material or material and pervasive, because you need to give an individual impact on opinion. So conclude whether the matter is material or material and pervasive, and then judge the right opinion, whether unqualified if it is an immaterial matter, or qualified if it is a material matter, or adverse if it is a pervasive matter. Judge the right opinion, conclude that the auditor has to present the opinion with the basis of opinion paragraph, highlighting the issue in the basis of opinion paragraph. And if you want to go further, you will say, okay, because for example, if you say it is a qualified opinion, so you can further add, it will lead down to a modified report. So And if you just want to keep yourself to the individual impact on the opinion, that's fine. So see the number of marks, it's already like 7 marks. Every bullet is 1 mark, 7. The maximum number of marks we need to fetch for government grant. How many marks we have for the government grants? Just 6. I've just given you a list of 7. And for the machine, 4. Again, 7. So I hope you're clear with the individual impact on the opinion, and you're clear with the matters to be discussed with management, all of you. Because this is quite a common question. And on my day 4 and day 5, because I will be reinforcing the core areas. So one of the core area is reporting. And there is so much misconception with reporting. So I have kept a specific time allocation on day 4 and day 5 in terms of reinforcement of the core areas, where I will be giving a specific time to reporting, making things clear in reporting, like CAM, like MURGC, like opinions, like other information paragraph, and even the requirements of the reporting question clear. So you will get an extra time for reporting in over the next 2 days, so don't be worried about it. But currently, is this question structure clear to all of you? Are we writing the aggregate impact? Are we writing the aggregate impact? No, because the question is not asking for it. We're just writing the individual impacts. If the examiner asks for an aggregate impact, then only write it. Is that clear? Can you move back to the word processor, to the portal quickly and formulate the answer? Okay, back to the portal. Can you see the portal in front of your screen? Please confirm. Okay, thank you. I might just stretch 10 minutes over the time because I just want to complete things up today, not taking it to the next day. So just might be 10 minutes, not more than that. Please refrain from the annotation, Sibin. You are currently doing the annotations on my screen. Please ensure you're not doing it. Thank you. Because I'm the tutor, it's my screen. So you're not doing any annotations on my screen. No issues at all. Okay, let's open Urgent. Okay, now we have results of subsequent events and the analytical review in the Urgent company, and we need to comment on the inconsistency of the evidence, right? So let's see what is the statement here. Can you see this Urgent company in front of your screen now? Okay, let's read it out. Urgent company's financial statement shows a revenue of $120 million. Last time the revenue was 114. You can use the number of revenue for finding the materiality where you need to find in. So revenue has 120, profit is $11 million. So you can use them and you need to comment on the materiality for Urgent company, and the total assets are 56 million. Fine. As part of your review of the audit file, you are considering the following results of the subsequent events and analytical procedures. So these are the following results of analytical procedures and subsequent events given to you. And you need to comment on the inconsistency of the evidence obtained. Subsequent event procedures. Newspaper reports in June 20X5 revealed that Chemi and Company, a significant customer of Urgent Company, entered liquidation, and creditors are unlikely to receive more than 20% of the total amount. So one of the customer of Urgent, Chemi, has entered into liquidation, and the creditors will not receive more than 20% of the amount. So whatever outstanding balance you have from Chemi, how much of that will you be receiving? How much of that will you be receiving as Urgent company? Whatever outstanding balance you have, only 20% of that. The amount outstanding from Chemi at the 31st of March is 0.8 million. So what is the amount outstanding? 0.8 million. And out of that, how much will be received? 0.16 million, right? None of the amount outstanding has been received to date. No further work has been performed as a result of these procedures. It's quite obvious. You've done a big blunder here. And do you believe your work is adequate? Considering this is a very important event, let's look at what is the year end of the company. I think the year end of the company is 31st of March, if I'm not mistaken, right? It was given right here. Year end of the company is 31st of March. And we have identified that there is a bankruptcy of a customer. So is it an adjusting event? June 20x5, we got to know that one of the customer is facing a bankruptcy and will only pay 20%. So is it an adjusting event? Yes. Should we adjust the financial statements? Yes. None of the amount outstanding has been received. So the outstanding amount is 0.8 million. And we know that only 20% will be received. So the remaining has to be written as a bad debt, right? No further work has been performed. Have we corresponded with the liquidator? Have we confirmed from the liquidator by when the amount will be received? Whether the amount will be received or not, even though the liquidator is telling us that 20% will be received, but will we receive it or not? So have we done something here? No. So if I just take this first part, which is subsequent event, the remaining is the analytical review. And in the analytical review, you can see the evidence here. So you need to judge whether the evidence gathered is right or wrong when you go to the analytical review and you look at the last column, right? And you carefully look at the last column, whether the review evidence gathered is right or wrong. I've already posted a video on this question to A and B in the last 3 months on my YouTube channel. You can follow that for further guidance on how to do the remaining question. But I'm currently drafting the subsequent event part in the live class, and the remaining guidance, you can take it from the other video available on the YouTube. If you struggle writing the answer for the remaining question, I'll share the link of that with you on the WhatsApp group. But let's see how you phrase the answer for subsequent events. Let's go back to my word processor. I hope you can see my support file. We're writing the answer for question number 3A. 1. Okay, let's get to the answer plan of 3A1. Answer 3A. Right, and this is we got from the case study. The case study is telling us that this is a customer went into liquidation, amount of not more than 20% will be received, and we should know what is the total assets of the company and profit of the company as well. The requirement of this question was to evaluate the results and commenting on the evidence gathered, right? So that's the requirement. Let's bring it down right over here. This is the requirement, right? Now let's stretch the answer. This is what I took from the exhibit. This is the exhibit information I got. Now let's see how can we convert this exhibit information to an answer. 15 marks is what we have in total. Let's see how many marks can you get from just this exhibit, and the remaining gets to the analytical review. Okay, I'll put my first heading, CAMI company, a significant customer, a significant customer. I put my heading. Let's see how many marks can I get under this. Okay, number 1. Evaluate the results, right? Now, when I evaluate the results, the outstanding balance from CAMI company is $0.8 million, right? So currently, the outstanding balance from CAMI is $0.8 million recorded in the state SOFP, which is how much percent of the total assets? What is the total assets of the company? If you can just bring it down on my word processor. The revenue of the company is, okay, if you can just copy this statement and bring it back to my support file so that you can calculate the answer for me. Okay, I'm just writing it over here. Okay, the total assets of the company, right? Okay, the total assets of the company is 56 million, right? So how much is of the total assets? $8 million, $0.8 million, which is, give me the answer. Currently, the outstanding balance from CAMI, $0.8 million recorded in the SOFP is how much? Which is, anyone giving me the answer? $0.8 million divided by 56 million total assets. because you have recorded the receivable in the balance sheet, which is, waiting for the answer. Be quick, please. Which is 1.43%. Okay, thank you. Which is 1.43% of the total assets, hence material. So you get your straight away 1 mark. However, 20% of this amount will be received, which is, bracket open, 0.8 into 0.20 is equal to, if I'm not wrong, it's 0.16 million will be received, and the remainder needs to be written off. The remainder is to be written off, which is $0.64 million is to be written off, which is how much of the profit? 0.64 million. That has to be written off, right? So because it is to be written off, how much is the profit of the company? $11 million. What is the percentage? 0.64 million of the profit, $11 million. It has to be written off. Okay, it's 5.8%. Okay, thank you. Which is 5.8% of the profit, hence material. I hope you're getting my point here, right? So every time you calculate the materiality, you get 1 mark. So absolutely 1 mark for bullet number 1 and 2 together, not individual, not 1 mark for bullet 1 and not 1 mark for bullet 2. Materiality in total is 1 mark. So have I done the right point? I found the materiality of the total amount. Then I found the materiality of how much is to be written off, and the written off is 5.8% of the profit, hence material. Now you go further, and it says none of the outstanding amount has been received and no further work has been performed in respect of these procedures. You go further and you tell this amount should be written off as it is an adjusting event. It is an adjusting event, and the liquidation of the customer and the customer balance exists at the balance sheet date, which needs to be impaired, to the extent which will be received. So you will only recognize in the balance sheet the 20% of the amount which is to be received. Rest you need to write off. So this amount should be written off as it is an adjusting event, and the customer balance exists at the balance sheet date, which needs to be impaired to the extent which will be received. The auditor needs to discuss with management the need to write off this amount. Okay, just 1 minute. Sorry if you cannot see the screen. I hope you can see the screen now, right? The auditor needs to discuss with the management where I'm writing. Can you all see the screen where I'm writing? All of you? Yes, thank you. Okay, the auditor needs to discuss with management the need to write off this amount as being an adjusting event, else the financial statements would be materially misstated. This is not a reporting question, so you will not tell the opinion. Otherwise, the financial statements will be misstated. Further, the auditor needs to correspond with the liquidator. The auditor needs to correspond to the liquidator to confirm by when, to confirm whether the 20% amount will be received or not. Moreover, the auditor needs to confirm the timeline when the 20% amount will be received. These are two different things, right? Whether I will receive the 20% amount and by when received. Further, So see how many marks have I taken here? Actions, procedures, 1, 2, 3, 4, 5 marks, right? If I just take materiality in focus, I get 1 mark for materiality. Just let me structure it like this. 1 mark for materiality here, right? This amount should be written off. 1 mark. Then the auditor needs to discuss with management the action, 1 mark. Further, the auditor needs to do this. I'm writing the procedures right. Further, the auditor needs to do this, 1 mark. And moreover, the further 1 mark. So see, I got 5 out of 15 marks. You're still left with analytical review. Are you clear with what you need to do in the question? You need to look into the issue. It was a subsequent event. So you need to judge whether the subsequent event is an adjusting one or a non-adjusting one. Should the balance be written off? You need to calculate the materiality. You need to discuss with management the need to write off. You need to talk about further procedures. What further procedures will you undertake? Because the question is saying no further work has been performed as a result of these procedures, which is very illogical. So you will comment on it. You will say that the evidence gathered on this is insufficient. Sorry, I missed that out. You will write over here, currently, as no evidence is gathered, on CAMI, currently as no evidence is gathered on this adjusting event by the audit team, the evidence is inconsistent as this evidence is inconsistent because the matter is important as it relates to a significant customer. As the matter is important, it relates to a significant customer, full stop. So we have not done anything on it, right? Currently, no evidence is gathered on this adjusting event by the audit team. The evidence is inconsistent because the matter is important and relates to a significant customer, and further work should had been performed by the team. So you're commenting on the inconsistency and you're fetching 1 mark. So total number of marks have now gone to 6. Are you clear with what to do? Will you continue on with the rest of the question analytical review? So in the analytical review, you need to look at the situation. You need to look at the evidence gathered by the auditor, and then you need to comment on whether the evidence gathered by the auditor is good or bad. If you believe the evidence gathered by the auditor is bad, then you need to recommend further procedures and so on and so forth. Is that clear? You can follow my YouTube channel for further links on this question. Let me put the hyperlink of that question over here so you can be watchful of that. Let me give you the link of that video in my Word file so you can watch that later. Okay, I'm just writing here for further understanding of question number 3A, follow my YouTube video at this link. Will you do it? Right here. Can you find the link here, all of you? So please ensure you follow this, right here. Clear? Can we move to the last part? Question number 3B, reporting 1. I hope you can do the remaining part from my video on YouTube. Again, these are webinars. Everything cannot be possible. You need just to be within the challenges, limitations of the time zones, right? I recommend explain the matters to be discussed with management, right? So we just look at one matter quickly from the practice platform. I hope you can see the practice platform. You complete the exhibit number 1 for Urgent Company by looking at my video on YouTube. Exhibit number 2, the Brannaby Company. So in a Brannaby Company, we have 2 situations, one of the grant, one of the machinery sale. Let's see what is the uncorrected misstatement. You are preparing for a discussion with management of the Brenner B company about misstatements identified in the financial statement during the audit for the year ended 31st of March. The audit working paper contains the following schedule of the uncorrected misstatements prepared by the audit team. So following is the schedule, right, of the uncorrected misstatement by the audit team. Brenner B company's financial statement prior to any adjustment of the items, right, shows a profit before tax of 43 million and a total assets of 105 million. So we need to use them for finding the materiality of the issues. We have two issues in the uncorrected misstatement. One is a garment grant and one is the machinery sale. So see the schedule of misstatement prepared by the auditor. The auditor wants the grant to be debited in the P&L. So that means currently the management has credited the grant in the P&L. So auditor wants this to be corrected. So auditor wants the grant to be debited to the P&L. That means reversal of the income recognized. And they want the balance sheet to be credited with 5 million. That is to recognize the grant as a deferred income. I hope you're getting the entry right. Why are we debiting the grant? Because currently the management has recognized it as an income. And why are we crediting the grant in the balance sheet? Because the auditor wants it to be recognized as a deferred income, right? $5 million. Now you will find the materiality of $5 million versus the total assets because it's a balance sheet item, and versus the profit before tax because it's a P&L item. And in a reporting question, you need to find materiality on both the balance sheet and the income statement, and on whichever it is material, that will prevail. I hope you're clear with that. In a reporting question, you find the materiality on the balance sheet and on the P&L, whichever is the higher percentage prevails for the impact on the opinion. Is that clear? So if I go back to my Word file and quickly stretch the answer for 3B, reporting part, just another 5 minutes over the session, but I hope that's benefiting you. 3B, reporting part, and you come down. This is the materiality. The draft, the financial statement shows this is the materiality line I took from the question, which can be useful to us. Okay, let's go down and write the answer for the grant. We have 6 marks for the grant, right? And you need to write the answer for grant. Let's go back to the exhibit, quickly read the grant. Okay, grant. The Brenner B company received a grant on the 31st of December, right? What's the year end? 31st of March. So they received a grant on 31st of December to invest in the new machinery. A condition of the grant requires the funds to be invested within the 12 months of the grant, or it becomes repayable. So within the 12 months, you need to invest it in the new machinery, else the grant becomes repayable. So you received it on the 31st of December. So by the next 31st of December 20x5, you need to invest it. Currently, it's the year end is March. The grant has been recognized in full in the statement of profit and loss. However, the machinery has not yet been purchased. Can we recognize the income when we have not incurred the cost? Tell me, can we recognize the grant income when we have not incurred the cost expense? No. So is this a wrong accounting treatment? The finance director of the Brenner B company assured the audit team that the money will be invested. But can we recognize the income on 31st of March when you have not incurred any cost on the machinery? Can we recognize the income in full? No. So the director is saying, I will invest in future. Whenever you will invest, you can recognize the income. But can you recognize the income currently? It's a wrong accounting treatment. So how would you write the answer? $5 million, is it material or not? Comment on the accounting treatment, right? Now, just to save my time, what I have done is I've written the answer during the time span I had, and I would just copy and present it in front of you so that we can save time. Just give me 1 second. Need to share the file with you appropriately. I hope you can see the support file in front of the screen now. Government grant, knowing the situation, see what's the answer. This is the answer. And I tried reduce the answer length for the examination purpose. See, you know the situation, now understand. The recognition of the grant in the profit for the year is incorrect, full stop. As the asset has not yet been purchased, comma, the grant amount of $5 million should be recognized as a deferred income at the reporting date. So am I telling the accounting treatment that the recognition of the profit is wrong because the asset is not yet purchased and the grant amount should be recognized as a deferred income? Will I get 1 mark for this sentence? Yes. Straight away 1 mark. Comment on the matters and impact on opinion. Second, as a result, profit is overstated and liabilities are understated. So have I given the impact on the financial statement when I was showing you the bullets? As a result, the profit is overstated and the liabilities are understated, 1 mark. As the grant represent 11.6% of the profit before tax and 4.8% of the total asset, this is material. So the grant is 11% of the profit, 4% of the total asset. It is material, another 1 mark. So I commented on the materiality. I commented on under an overstatement. I commented on the accounting treatment, 3 marks, 1 paragraph. Come to next. This therefore represents a factual misstatement and the management should be asked to amend. So should I ask management to amend the financial statement because it's a factual misstatement? What is a factual misstatement? When you have a clear breach of an accounting standard. When there is a clear breach of an accounting standard, it is known as a factual misstatement. So should I ask management to adjust the factual misstatement? 1 mark. Right? If the management does not amend the financial statement with respect to the government grant, then the auditor will issue a qualified opinion on the basis of a material misstatement. It is a material misstatement, right? So auditor will issue a qualified opinion if the management doesn't adjust it. 1 mark. As the misstatement is confined to 2 specific elements, debit and credit, a debit of the financial debit of the balance sheet and credit, debit of the P&L and credit of the balance sheet. This does not represent a substantial portion of the financial statement. So this would not be considered as pervasive. So I'm telling examiner, this is material only. This is not pervasive because it's not affecting the substantial proportion of the financial statement. I think in my previous webinars, I have mentioned that for something to be substantial proportion, it must be over 60%. So if something is over 60% of the profit or over 60% of the assets, then only it will be considered as a substantial proportion. Otherwise, not. So you are telling examiner that this is only confined to a debit and a credit, and this is not affecting a substantial proportion. It's only affecting 11% of the profit and 4% of the total asset. So this is not pervasive. You get another 1 mark for concluding it's not pervasive, rather material. A basis of qualified opinion paragraph would be followed. Would follow the qualified audit opinion, which describes the matter giving rise to. So after the qualified opinion, you will give a basis of qualified opinion, 1 mark. So 1, 2, 3, 4, 5, 6, 7. You need to get 6 marks, not 7. But I hope you're clear with the structure of the answer. Can you write the same answer for machine sale, 4 marks? I hope you will be able to do it. Reporting questions are pretty simple, right? Provided you know the structure of the answer. But please ensure you do the exhibit number 1 on urgent company. More importantly, you need to read the results of the analytical review from the exhibit 1 of urgent company. And you need to formulate an answer in the same way I formulated the answer for subsequent events. If you struggle, watch the video on the YouTube of which the hyperlink has been provided to you. So we are coming to the end of the question number 2 and question number 3, which was a very specific agenda for the day 3. We focused on a drill inside out on question 2 and 3, marking schemes, examiner expectations, I hope you enjoyed this exercise, and I hope you gained something out of this exercise. The basic purpose was to open your mindset of how you read, how you write, how you understand, what you do wrong. I hope over the last 2.5 hours or 3 hours, you have been able to identify some loopholes. You have been able to identify some areas where you need to improve upon, and you will benefit from that. Is that correct? Can you just share the feedback for the agenda for the day 3? We worked on the question number 2, and we worked on the question number 3. But some part of the question number 3, exhibit 1, is to be watched through the YouTube channel. Right. So this was the day 3 of the webinar to success for AAA June 22 exams. I'm Kashif Kamran, signing off from the day 3. We'll meet you back with day 4 and day 5. And the agenda of day 4 and day 5 is reinforcement of the core areas. So I will go inside core areas. We'll discuss core areas, and we'll discuss how can you improve upon the core areas. We'll not be doing any draftings, but we'll be focusing on the do's and don'ts of the core areas. For example, reporting. How can you improve upon reporting? For example, quality control issues. For example, audit evidence. I will be selecting some core areas, and we'll be having a good discussions with you on each core area so that you gain confidence of the do's and don'ts on the core areas. I will be giving you numerous examples to help relate them with exam context as well. Okay, thank you very much. If the session was good, you liked the session, that's wonderful. And definitely the Word file will come to you on the WhatsApp group and on my Google Drive. So don't worry about it. Thank you so much for participating in it. And I'll see you back with reinforcement of the core areas. So the past paper practice has now ended. We'll be focusing on the core areas in the last 2 days. Thank you so much. Take good care of yourself. Study effectively. And I wish you the very best of luck for your upcoming exams in June. This is your tutor, Kashif Kamran, signing off from another insightful day of the webinar to success, the day 3. Goodbye and Allah Hafiz.